Thank you very much for that, Katina. Man, what is up, beautiful people? Welcome to Learn How to Trade, formerly known as the Midday Show. That is your girl, Adara. I'm Sharif, and we're going to wait, as we typically do, for everybody to come in. I know how much Sean loves when I do this. The roll call, baby. Let's wait for that chat to populate. Get in here first, and you get your name called out. There you go, Pitchbull. Matt Florence in the house. Robo, Adam DeLuz. Numero uno Arsenal fan. Arsenal plays today. Luton, check that out. Alex Davis, Stoyle Stocks, D-Loaf, John Yates, Vin. What's going on? Ooh, there's all these things going over here. Will Evans, Mark Susi, Steve B, Rami. There we go. Laura Sanchez, baby. Michael Lloyd, Big Michael Lloyd, Raj. And then we got Will Newman, Brian Wong. Everybody is in the house. Even Elon Musk is in the house. Elon.
Look at that.
Elon. We got a good show today.
We did.
I know yesterday was a really technical.
But it was. I think we learned some stuff. I feel like I got a little something out of it. So hopefully some people got a little something out of it. But yeah, good times. And to answer Sean's question about whether or not we will be trading Tesla, I am already in Tesla. I got in Tesla. So awesome. We shall see what we shall see. I usually get a little bit skeptical getting into things near high of day, as I've said, or low of day. But I mean, the support for this one is so strong. I got in on a dip. We shall see what we shall see. Generally, we're trading less because we're focusing on the lessons. But I was like, we may as well slide into a little Tesla long. Oh, sorry. Before we begin chit-chatting here about fear and greed. But I'm very excited about today's lesson.
Yeah, we're going to talk about fear and greed, but before we do, what are your honest thoughts about the Cybertruck? Honest, be real.
We were talking about this. I like it. Also, I was showing you because I was looking it up, and there's ones that have been wrapped in this light millennial pink. Huge fan of that. I'm actually going to pull up a photo of that.
Yeah, I think you should, because it's clearly wrapped. Because there's no way you can get stainless steel pink. Not that I know of anyway.
But I mean, come on, I'm not going to complain. Look at this beauty. Hello. Oh wait, that's blue. That's
Take
blue,
that
which
blue
is also
one
great.
Out of there. No, I'm just going.
Red. I don't mind any of these actually.
Yeah, that's actually not a bad look. The fact that you can wrap these. Go back to the Google pictures.
Yeah. Oh wait.
Right, it's right
different
to the next
tab.
of it. Yeah, right there you go.
Look at that.
That's not a bad look.
I like the trunk on this. Also, in terms of pure technicals beyond the color, nice trunk.
Yeah, no, it's a
very nice trunk. I like the way you kind of have it pulling out here. I like that whole kind of boxy look, as we know. So there we are.
I muted my mic. But yeah, the Chilean nightmare is making me laugh. Man. Yeah.
Also, thank you to Hayes Records for the super chat, $1.99. I'm a simple man. $50 an hour trading is good for me.
Hey man, that's
also shout out to DVDRD43 that they saw a Cybertruck in the wild yesterday. So yeah, shout out to that.
Adam's trolling me in the chat. I'll get you that color one day if you're like, man, I don't want pink, but get me the blue one. Shout out to Adam. Numero uno Arsenal fan. Arsenal plays Luton today. We play away. They are fourth from the bottom, so we should be getting that dub. But let's get to work, guys. We got some interesting stuff to talk about. Much less theoretical than the lesson from yesterday, but we got to get the theoretical stuff out today. We're going to be talking about emotions that basically all of us really can relate to. They are ones that exist in trading and exist in life in general. Those are, as you can see on the screen, fear and greed. They affect you differently. They affect different people differently. They affect you differently, and depending on which context they arise in. So let's get right to it, guys. Trading psychology, we have several emotions that are involved in trading psychology. Obviously, a couple of the emotions that we just prefaced right now, fear and greed. There's also other ones, hope and regret. I know that I have suffered from those bad boys as well. We're not going to be talking about that today, but those are ones to keep in mind as well. Hope that something might pop up, holding on to a loser when you should be cutting it. Regret, taking a trade rather than winning or learning. In this case, you don't espouse that kind of mentality. You start festering and regretting all those, dumb trades that you took in the past. That's not going to help any, right? Reflecting on it constructively, that's what helps. living in the past and beating yourself down, and you know, it doesn't help anything. In fact, I was talking to Steph yesterday in the kitchen, and you know, we were talking a little bit about trading psychology, and I said something to her. I think she you know, she reacted well to it. It's like, be kind to yourself. If you were criticized, if I was giving you constructive criticism, would I be as aggressive to you as I am to myself sometimes, and beating myself down about bad trades? Be kind to yourself, people. You know, don't beat yourself down over historic stuff that's already done in the past. All right, let's go. So understanding trading psychology. Trading psychology can be associated with a few specific emotions, some we already talked about, and behaviors that are often catalysts for market trading. Conventional characterizations of emotionally driven behavior in markets ascribe most emotional trading to either fear or greed. And that's what we're going to talk about today. Greed. Simple. I'm sure anybody can define this, but we're going to contextualize it a little bit. Greed can be thought of as excessive desire for wealth. Who doesn't want to be wealthy? So extreme that sometimes it clouds rationality and judgment, and that's a real thing. Greed can lead traders towards a variety of suboptimal behaviors. So it basically influences the decision-making process. This may include making high-risk trades, been there, buying shares of an untested company or technology just because it's going up in price rapidly, or buying shares without researching the underlying investment. Additionally, greed may inspire investors to stay in profitable trades longer than is advisable. Been there too. You know, just to squeeze out some extra profits, or you know, to take a large speculative position. Been there. Greed is most apparent though this is very important. Greed is most apparent amongst the largest group of people in the final phase of a bull market, when speculation runs rampant and investors throw caution into the wind. And there, you know, there's like a whole, you know, there's a whole topic we can talk about here about, you know, what's that? What's the word that I'm looking for here? It's, you know, the contrarian aspect of things. You go long when people are most fearful. You sell when people are most greedy. There's a whole contrarian theory that was in the book of Technical Analysis of the Financial Markets by John J. Murphy, and as well in my Chartered Market Technician materials. It's in both. So important is it. So it's interesting to see that, you know, it actually arises, like it happens to most people in a certain phase of the market today.
That's a good point too. Yeah, I didn't even think about, like, until I was like kind of reading the notes on this, I didn't really understand the extent to which it actually is most apparent at certain points, you know, as we're running up and as people are really clamoring to get a piece of the pie. Yeah. You know what I mean? I mean, exactly. It makes sense, especially if you have stocks that are like running up like crazy. It's understandable everyone wants a taste. I mean, like, you know, we're human. And we're talking about this too with regards to mean reversion trading, how you were saying, like, it does actually make sense that people will attempt, like, you know, they'll be like, oh, you know, we're gonna like try to circumvent this move or try to get ahead of this move, right, or joining a move when the steam has already run out. But it's like, you know, just kind of stop and think before making those moves.
Bang on. Quick, let's get into the fear aspect of things as well, because there's a lot of overlap between these two. Conversely, fear causes traders to close out positions prematurely. I was having a discussion with somebody in the chat not too long ago, and they were telling me, you know, that they were down on the day because they didn't put the correct stop loss. You know, they put it basically in the area that allowed them to lose the amount of money that they were willing to lose, rather than placing it at actual technical levels. And that largely is a result of fear, right? It causes people to close out positions prematurely or to refrain from taking on risk because of concern about significant losses. Completely understandable. Fear is palpable during bear markets, and it is a potent emotion that can cause traders and investors to act irrationally in their haste to exit the market. Fear often morphs into panic, wow, been there, which generally causes significant sell-offs in the market from panic selling. We've all heard about the instances of panic selling. I'm sure if you go back on a chart, for example, and look at Meta, after 2 different earnings, Netflix, just go back to 2022 and look at those days on the chart.
Yeah.
That was panic selling
Or
galore.
Tesla after earnings in Q3 when it went down to like 10% in a day.
Absolutely. Regret may cause a trader to get into a trade after initially missing out, and that's an issue of regret here. That's also a derivative of fear because the stock moved too fast. This is a violation of trading discipline and often results in direct losses from a securities price that are often falling from peak highs. So how do we manage all this? It's great to be able to define fear and greed. It doesn't really help you any unless we give you some tips about how to control those emotions, Adara. So let's get to that because I think that is probably the more important of the lesson.
Yeah.
How do we manage greed and fear to be a successful trader? First and foremost, the main thing that we talked about in week 1, have a dang plan. Okay? You got to have a plan before getting into a trade. You see Sticky Note Nation over here, hence that is like the prototypical plan. He has his price, he has whether or not he wants to go short or long, and he has the reason for the move. He has a plan. I'm talking about the Katina man or Kid Katina. Well, we're going to go interchangeable now. I saw somebody wrote in the chat, and I really liked it. I got to get your authorization for it, though, first. Yeah, he's authorized it already. So we may throw it interchangeably here and there for the Katina man. Have a definite plan. Having a definite plan while trading stocks ensures that you stay on track and avoid any emotional impulse that may deviate from the plan. In particular, the right plan can stop you from the right plan can stop you from emotion-induced over-leveraging, doubling down on a losing position, and removing stops or a losing position. So first of all, what's included in a full trading plan? Firstly, you need to look at multiple time frames. We've talked about this, but I'll talk about it again. You need to look at the longer term time frame, the shorter term time frame. And then 2, you need to basically assess where you're going to get in. You may not have one area that you like. There may be multiple areas. What are you doing here? Is it a breakout trade or is it a dip trade? So you got to iron out your plan. If it's a dip trade, are you dollar cost averaging? Are there any planned dollar cost averaging DCAs? If so, are they at key support levels? Okay. Where is your stop going to be? Are you getting out the full amount at your first stop, or are you going to take partial amounts out? So do you have 2 stop levels that you like? Stop 1, stop 2. Thirdly, where's your first profit target? Is it just 1 profit target or is it 2? So your plan has to be inclusive. Now, the better you get at it, the quicker you're going to be able to do this. You're going to be able to look at a stock within, depending really on who you are, you may be able to do this within a couple of minutes. You chart, you see the plans, you throw in the horizontal trend lines for your stops, your entries, etc., your exits, and you move on, right? And that just comes with practice, practice, practice. Have a definite plan, Adara.
Yeah, and I think too, I actually kind of have a question then, or maybe like an observation, a point of conversation off of that. Do you think sometimes it makes more sense to kind of adapt the plan while you're in it, and I don't mean like, oh, trying to like take more profits after I've already taken profits. I mean, if something is going a little bit awry and you want to maximize whatever profits you have, do you think sometimes it makes more sense to kind of get out before it completely goes against you?
Look,
I mean, I know it's a personal thing.
Have I done it?
Curious.
Yes.
Okay.
Am I being a hypocrite by saying I disagree with you? Yes, I am being.
But you disagree.
But
okay.
I do disagree.
That's fair.
Look, the stop is a reason. There's a reason why you've earmarked that level as your stop loss level.
So don't get out until you hit that level.
Yeah, because it may not. And how badly will you feel if it curls up above there and then runs?
True, and
I'll feel like you know what, right?
That's fair.
That's just my personal opinion. But have I done it? Yes, I have.
Okay.
Okay.
Thank you.
Put aside this get-rich-quick mentality. You got to throw that out the window, okay? Longevity is what we're here for. Yes, bang. Get rid of that get-rich-quick mentality. We are here for longevity. One myth flowing around the stock market for ages is that you can get rich overnight. Maybe you can, but that's definitely the exception, not the rule. However, the fact is that the stock market is a great place to grow your wealth, whether you're investing or whether you're trading. But in the long run only, not in the short run, unless you're super gifted or super lucky. The market does offer better returns than any other investment option, but that takes time. Maybe not in Canada where the real estate market is an absolute rocket, but that's neither here nor there. So if you wish to see your money grow multifold, abide by patience, let your investments grow or let your trading acumen grow, right? Follow your plan. Don't give in to any impulse or like fear or greed.
Yeah, I think like too, like sticking to the plan is the best way, because I was going to ask too, is there a way to kind of combat both at the same time? Because they go hand in hand. Like if you're too fearful, or if you're not fearful enough, you can risk being greedy and then kind of the opposite, right? So I think having a plan that kind of counteracts this and includes both, and that's basically just sticking to your guts, sticking to your discipline, not wavering, I think is like a really good way to kind of roll everything in one. So I appreciate that.
Oh, the thief has entered the chat. Renata, she stole 1,000 points off me.
Oh yeah, I forgot about that. Yeah, and then she was being egged on by Bears.
Oh yeah. You know.
That was really entertaining.
My finger was itching on the hide user and channel thing. No, I'm kidding, of course. Just
we jest.
We jest. Keep a trading journal, Adara. We need a trading journal, hence.
Oh. It's so large too.
I know, because it's got many papers.
Yeah, it looks like a legal binder.
So it is.
Oh, okay.
You're bang on.
Okay.
Keep a trading journal. As a trader, you need to be accountable to yourself, okay? Unless you're on a prop firm and you have to be accountable to
yourself and other people.
Exactly, right? So you need to be accountable to yourself while trading. You should keep constant track of your trades. With that track, you should be able to assess your trades and see whether they align with your planned goals or not. One thing that really helped me is, like, I had the stencil that I made, and it was what my entry would be, where the support levels were, where the resistance level were, what were the market conditions, and this was a pre-trading plan, okay? And I would enter in all these numbers in the stencil that I already made. And then later, when I wrote my journal, I would reference back to that pre-trading, stencil checklist that I went into, and I would see, did I stick to my rules? And then after like a prolonged period of time, I went and I cross-referenced all those days on the pre-trading checklist and on the journal, the post-trading journal. And I would see how often I adhered to my rules. And surprising to me, I was only adhering to my rules about 2/3 of the time. So 33% of the time, I was deviating from that, and that's not good. So I wouldn't have actually known that. That was actually quite a surprise to me. I thought maybe it was like 10% or something. So
actually having it able to like reflect and being like, here's what I said I'd do versus what I did is actually a good way to evaluate how it's going.
Bang! If I didn't have that data, I grossly underestimated the amount of times I deviated. If I didn't actually go back and do a cross-reference for each particular day, I wouldn't have known that I deviated so often.
Yeah.
And I'm willing to bet if that happened to me, it probably happened to a lot of other people. Keep a dang journal and be very consistent in your entries. Again, but when you're writing that journal, be kind to yourself. Write the stuff that you did well in just as much as you write the stuff that you did poorly. Whenever you follow your plan, write down that you followed your plan and what aspects of your plan that you followed. So the areas that you excel in, that you know you do well in, you're reaffirming that behavior on there while also addressing constructively the things that you can do better. So those are the three things that I'd say to help manage fear and greed. Have a definite plan. Put aside that get-rich-quick mentality and keep a dang journal.
I really like that. I think I need to start the journal thing just because I haven't really done a trading journal because most of my trading, as I've said, is basically here on the midday. But yeah, I mean, I think also too, like when you're mentioning like planning out the trades ahead of time and then reflecting, it reminds me too of like the whole sticky note, right?
Yes.
Like having a plan, having a really clear plan and adhering to that plan, because I think even having a plan in and of itself kind of forces you to be accountable, which is really good because like you have it written down, set in stone. This is what I said I would do, and I did or did not do it, right? So I think that's a really good way of looking at it, having it in a journal, and it's something I would like to start doing.
Yeah, no, I mean, especially like, you're still very new in your trading, like your life, you know what I mean? Obviously, you came to this job thinking, it'd be more the broadcasting side of it.
Yeah, I did not think I'd be trading
and
at
all of a sudden, you're a trader, and
it's really fun.
Yeah, so you've got a great journey ahead of you, and then lots of time pick up these good habits, right?
Thank you.
And I wish I had that when I started as well. Wish I had like all this around me here.
Yeah, I mean, I feel
fact
like
is,
so
2 years I was on
grateful.
my own.
Yeah, that's
right?
crazy
Yeah.
too. Well, especially because you started like in the middle of the pandemic as well, so you're even
Exactly.
more isolated.
Yeah.
But that's crazy. Also, too, there's a comment here too from
for it.
Nimit that kind of gave me a question.
Nimit.
Never make a plan in the middle of the day. It never
Dang.
works to trade the same day with the sudden plan. So I guess does that also apply to like stocks? Like if you see a stock moving in the middle of the day, maybe don't trade it, or maybe be more if it's not on your plan.
I
or?
wouldn't put that as a hard and fast rule.
Okay.
Why? Because a
Things have
catalyst could come in midday and cause that stock to move. The stock could be absolutely flat.
And then at like 12, it's like.
Well, there's the catalyst came in midday rather than at 8 a.m.
Yeah.
Right? So I wouldn't say that that's a hard and fast rule, but I think that, you know, if the move's already been had and the price action is in the middle of support and resistance, obviously it gets a little dicey, right?
But basically, so like still adhere to a plan, even if this stock wasn't originally part of your plan.
Yeah.
Basically. Okay. Thank you.
All right. Moving on. Any questions before we kind of, talk about some market stuff here? I know Nimit wanted me to look at GameStop because they have earnings tomorrow, I believe.
Oh,
GameStop
that'll be
is,
crazy.
yeah. So, and I know the Katina man right now is actually involved in GameStop, so it'll be very apropos. Yes, Nimit, I'm already ahead of you, my friend. Look what he said. Sharif, don't forget my question on GME earnings. Ahead of you, my friend.
Do not forget, Sharif.
Put your questions in the chat. Here comes one from Emma Hamada. Sharif, can we still point out unusual stock prices during this? AMD broke low of day, and I don't know why unusual red candles. But what does that have to do with your trading plan, Emma? So let's pull up AMD over here and talk a little bit about that.
There was some news on AMD at 9:30. This is, or 9:13, I guess. This is an update from Benzinga. AMD's new generation AI GPU series, the Instinct M1 or MI 300, great name, will be available soon with shipments expected to reach 300,000 to 400,000 units in 2024. So that wouldn't really contribute to the drop, but I just wanted to put that out there.
No, I would have definitely taken that into account in the pre-market when I read, for sure. But here's a look on AMD. So let's talk about AMD. I talked about this one yesterday. Why? Because we found resistance yesterday at the exact area that we had support on Friday, okay? And we talked about how resistance and support were they flip, and they flip positions all the time, and that's normal part of technical analysis. So right away, I would have been looking at yesterday's close, which is right here, okay? And I would have made a little bit of a zone for myself between the area that I had charted, the high of the previous day, and the close. So that's 118.59 to 118.84. I would have given myself a little bit of a zone there. Now, I would have been looking to get short on AMD in the zone. Lo and behold, though, it didn't make its way up there. So that would have been my personal trading plan, right? To get short on AMD. Chips were all weak. The market was super weak to start the morning. The Mag 7 have lifted it. AMD has not participated in this. So that would have been readily apparent to me immediately, right? That AMD was not going to be participating in the move up. So my plan on AMD personally would be to get short at around in between that 180, high 118s and mid 118s. It didn't make its way up there, so I wouldn't have been involved in this plan. It really doesn't have anything to do with my plan that AMD is continuing to sell off. However, look at this area over here. This is the low of yesterday, 116.50. What does that mean? That means I'll be very interested to get along at 116.50, but I'm going to watch to see how it trades around there. Why? Because it's a counter trend trade. We're down currently 1.5%. We'll be down more when we get down into that 116.50, knowing that it's a counter trend trade. I'm going to tread very carefully around those levels. But there you go. My main entry would have been a short off yesterday's resistance level, and secondary entry would be long off that 116.50-ish area if it makes its way down there. So I don't really see how it has anything to do with, what relevance the fact is that AMD continues to sell off on the day. That's just my personal opinion on that. All right. Any other questions? BlackBerry. Trading journal, good idea. I'm writing down some things as well, but can it help to change your emotional structure? Yes, I'm gonna have to say it can. And it probably won't on day one. Like, you're gonna have to do this for a while, right? Where you find yourself maybe writing in the same thing with respect to possibly a mistake or a deficiency or a state of mind that you keep writing in there. And so that should help alert you to the fact that this is something that you need work on. And obviously you could be cognizant of that already, or you may not be. Like, for example, how I wasn't cognizant of the fact that I deviated from my rules a third of the time. But I was able to ascertain that by actually looking at the data. If, you know, for example, if you have some sort of mental block or some fear or greed instincts that you may not be aware of, or they're maybe subtle, maybe they come to light because you journal about them every day, and then when you go and you review those journals, you start picking up, oh, yeah, you know what I'm saying? So I think you should definitely be journaling, despite how obvious it may seem to you that some of your deficiencies are. That's what I would say about that, okay? Moving up here, Trader Forever, journaling your trades is a total joke.
Huh.
If you can't look, yeah, he's got an opinion, let's see what he has to say. It's a total joke. If you can't look at a chart and make a decision on whether to enter or not, you shouldn't be trading, and journaling sure ain't gonna help you. I would respectfully disagree. I would say that for somebody who is starting anew, it really helps to jot down your thoughts. And in addition to that, it may be different from person to person. Perhaps you're gifted. Perhaps you look at a chart, right away you're able to see support and resistance levels, and you have that conviction to get into those trades. And good for you. Hats off for you. That may not be everybody's journey. Everybody may have a different journey. So let's start with some fundamental rules, and then once you're successful at it, and you can throw it to the wayside. You say, I don't need journaling anymore. But I don't think it's fair or prudent to make a blanket statement that nobody needs journaling. Adira.
Yeah, I mean, I really like this comment from Denver Trader as well on journals. Tracking your trades in your charts to visualize your execution after the fact is fairly helpful. I think that's a really good way of looking at it too, like a different kind of approach to journaling. So like instead of, you're still reflecting on your trades, but you're also like reflecting on them with regards to how they actually look on the chart when all's been said and done. So I don't know if that's like an addition to journal or just its own thing entirely, but either way, I saw that comment, I enjoyed that, and I was like, you know what, shout out to Denver Trader. That's a good point, and it's something that I think we do like passively, like we look at the charts and we're like, oh, I could have entered here. But I think doing it actively is something, at least for myself, as someone who is fairly chart reliant and trying to work on reading charts. And sometimes, we all make mistakes on that stuff. Everybody makes mistakes. Everybody has those days. So yeah, I'd like to kind of try doing that more as well. Also, there are some questions with regards to people asking about apps for journals, if there's any trading journal apps, which I don't have the answer to.
I got
know
my
you have
app
your
right
hard
here.
copy.
It's a little bit of an older app, Adira. I downloaded it not that long ago, but here it is.
Does it take up a lot of space on your phone?
It takes a lot of space on the desk, that's for sure. Yes, the difference between these two is stark.
Yeah.
No, to be quite honest with you, I could use voice dictation on my phone, and I think that would be completely appropriate. I just find that, pen to paper is a lost art a little bit, and it helps me slow down my thinking. Right, when I'm actually writing stuff down, I can kind of be like, oh, maybe I should also write this. But if I'm quick with it and I'm just trying to get it over with, the thoughts don't fester as much. Oh, let me read one for you guys.
Oh, I like this.
Yeah, let me read one. So I had my pre-market entry. I'm not going to tell you exactly what day it was, but Tesla, I wrote pre-market, little heading, Tesla, relatively weak. Then I wrote ICCM, which was a small cap gapper. You guys know my affinity for that. Up 200%, flirting with $3 for a while.
Flirting.
Yeah.
I love it.
Nike and FedEx AM earnings. QuantumScape moving 8+% in the pre-market on delivery news for its whatever. I wrote something there. I can't even read it. And then afterwards, here's what I wrote. Trading day. Took an excellent trade on QuantumScape. Got into it fairly early in the pre-market, 8:34 a.m. at $6.33. And then I wrote my share size. Should have been more. Isn't that always the case? It was trending up on news and formed a nice flat top breakout. Boom, I was going to hit the flat bottom, but that's not. I know, right?
And the aggressive trying to push the button.
The Katina man's like, you stole it from Neil that early on? I'm like, yeah, I did. A nice flat top breakout. Had to be patient with this one, but it never broke VWAP. It started breaking out at 9:23 a.m. as I expected it would, and I sold at $6.60, which was a pre-selected resting profit taker. However, could have done better. Definitely should have held a piece for the dream. There was another resistance level at the $7-ish area. Why was I so quick to get out of this one? Be more patient, Sharif. So I was complaining to myself and scolding myself in that particular entry. So clearly something that I can tell you personally that I've had was a problem, and you and I have talked about this off camera, is my patience. Well,
I have patience issues, yeah.
There you go.
Well, no, I think too, I like that, like thank you for reading that, by the way.
Absolutely.
And I think I like, because it's like a good combination of like, you know, reflecting on your emotions while trading, and then also like reflecting on legitimate levels. Like I think it's a good combination of, especially this week talking about trading psychology, taking the psychological impacts on the trading into account while also reflecting back on like key like factual levels.
Absolutely.
Like I think it really summarizes kind of what we're talking about really well. So thank you for saying that. Also, because you mentioned share size in the journal, I have another kind of follow-up question or talking point for you.
Thanks.
Would you say that, I mean, I think maybe, I would say maybe it does, but what's your opinion on with regards to the role that share size plays in reflecting your fear or your greed?
Oh yeah, that's a big one right there. But that's I don't want to say it's an easy one to fix, but can you think of one very you know, succinct fix for that?
I mean, I would say if you
it has something to do with stairs.
Yeah, I'm piecing in and piecing out.
No.
Oh.
Gradually increasing your share size as you become more comfortable.
That makes sense.
Why do you have
too.
to go 100 shares on Tesla the first day? Why can't it be 5 or 10?
Yeah, that's
you know
true
what I mean?
too, right?
Like,
Yeah, or
what's
it's
stopping
like,
you?
Yeah, thank you. That's a better way of putting it then. But yeah, I mean, yeah, just kind of like piecing in, and then also maybe, you know, like if you like not like, you know, kind of what we're talking about with dollar cost averaging, if it's part of your plan sometimes too, maybe to, you know, to play, like put different amounts of shares in or enter piece into the trade at different times, but like make sure it's part of your plan, right? Like sometimes I'll piece out my trades, but I was kind of usually have those levels planned in advance if I know there's somewhere that might be an area of resistance or support and I want to, you know, put a beat water there. Yeah.
There you go. What are you guys talking about in the chat over there? Nimit, what are you guys saying back and forth? What's going on in there? Ram's laughing because she knows what's up. All right, guys, let's have a look here at GME for a sec while we take a little bit of a break from this. Nimit wanted me to look at GameStonk. So we're going to have a look as GameStop does have earnings tomorrow. Katina, man, is it after the bell tomorrow? It is after the bell. So make sure to check out the Markets Recap show tomorrow with the Katina man, as he will be bringing you GameStop's earnings live on the Market Recap show. First of all, let's look at the daily here on GME and figure out where we are on the daily. Are we at critical support and resistance levels? First of all, right away, look at this trough over here. First resistance level I'm looking at is that $18.50, $19 area. Right away, we have a very clear support level over here that was obviously breached later. So I'm looking for that level as a resistance level. And lo and behold, it happens to have confluence with that $19 level, sorry, that 200 EMA right there. So it's nice when those two levels conflate, you have that interesting area over here. So right away, I like 19, 18.5 as a possible resistance level on GME. Above that, we really have to get into, and I'm not going to put too much stock into these wicks over here. I see the wick going to 2150, but you guys know how I feel about wicks versus closing prints. Closing prints is the committed money and therefore more important in my eyes. The second level of resistance I'm looking at is that 2150. We have that trough over here, that higher low that we made during the mid-June session. That's that 2150 level. So we're talking about firstly and foremost 18.5, 19, and then we're talking about 2150. That's if we get obviously a good run up on GameStop. This is assuming they beat, or for whatever reason the guide is not as bad and we continue to run up. With respect to support, I'll be looking to see whether or not, number one, we hold the 50, which is around that 14 2/3. But what really interests me the most is the bottom end of this range over here, around that 14.25, 14. Let's see if that area holds up, with obvious ultimate support really being that low that we put in not that long ago, around late November, November 28th, it looks like we had that $12 level act as a level of support before we started pumping up over here. I remember that day. That was a good day for GameStop and has been continuing to be a couple of good days, except today, giving back a little bit. But that higher low pattern on GME on the daily continues to hold up. We haven't made a new low. In fact, this is a bullish engulfing candle over here where so far, yesterday's price action completely engulfs today's price action, but we're still very early in the day, 11:36 right now, so let's not make any declarations. So to surmise, I like 18.5, 19. That takes us to this trough back to May 2nd. As a second level of resistance, I'm looking at that 2150 area. That takes us to mid to early June as a support, as a resistance level. Adair.
Yeah. No, GME I think will be an interesting one, especially because this one, when it runs, tends to run like crazy, like a sprinter. So I think, I think GME is one to keep an eye on for sure for tomorrow, especially with regards to earnings. In terms of earnings names today that I've kind of kept my eye on, but it hasn't really done that much since since right at the open. GitLab kind of chilling out around this EMA, actually right here, like very close to the EMA. I'm keeping an eye on it, but yeah, I mean, like unless we see kind of a newer high or a newer low, I wouldn't really be able to go long or short on this one. But yeah, here's GitLab. And yeah, I mean, if anyone has any questions or thoughts on fear or greed as well,
yeah,
definitely hit us up, because yeah, I think it's a really good conversation. I think it's something that it's kind of so prevalent in trading as well.
You know what I'd be interested to hear? Other people's experiences with fear and greed. Maybe they don't have questions for us because, you know, maybe nothing's coming to their mind.
It's a hard thing to ask, I guess. It's more just kind of experiences, and like any coping.
Yeah. But I'm sure other people would like to hear about your experiences. You don't have to be too revealing if that if it makes you feel awkward or whatever. But we'd like to hear your experiences about like what experience and maybe what you learned from whatever situation, fear or greed related, with respect to trading. Obviously, put it in the chat. We'd love to read out your stories and give people context because I don't want to say misery loves company, but that's not what I mean. But people want to know, that others have gone through the learning curve that they've gone through, that they're not the only ones, that have to suffer with these, trading-related emotional states, right?
Yeah.
So yeah, please, if you're comfortable, put in your experience there. Sharif says, Patrick, what's up, Patrick? I'm trading for a living. The pressure is huge. Patrick, it's not my job to tell you how to live your life. Obviously, that is your prerogative. But my suggestion would be, to have an alternate source of income while you develop your trading skills. As I said anecdotally yesterday, funny how it works that those who don't need the money end up being the most successful at trading. And then those who say, oh no, I got bills to pay, I got mouths to feed, this has to work, somehow, always feel a bit too much pressure, and then it ends up, it doesn't work. I don't have the data to support that. Again, that's more anecdotal, but that would be my advice. Emotional suffering is real in deep losses, says Patrick, and I couldn't agree more. I couldn't agree more with that. Looking over here, Johnny K. I greeted so much when I first started trading. I initially 100x'd my account from luck and wanted more and more, and eventually blew up my account. I'm sorry that happened. Obviously, Johnny, we're not here to say, great, that happened to you. I did better than that. No, that's a real emotion, and that's a real outcome that a lot of people have talked about. I follow lots of people, on social media, and they all want you to think that they're doing well all the time, right? And a lot of these guys are new traders. Let's be real about it. And they want to show you pictures of Ferraris, and they want to show you the good life and the watches and whatever. Thank you for being real about that. I think that's one of the the most underreported, or like the least
talked about. Discussed.
Thank you. Yeah, in the trading world,
yeah,
is the actual L's that we take and the feelings we get from the L's.
Yeah, and I think like that's why I think being able to be, like they were talking, there was a really good conversation as well this morning with Sean Noby about this, how like losses, like don't be upset about your loss, especially like when I mean, I'm still paper trading, right? But it's like everyone else, trading real money here, talking about these real losses, and I think think, it's kind of, it's a level of honesty, right? Because especially, like, you don't want to admit you're wrong. And there's some, there's some comments in the chat here as well about stubbornness being huge with regards to fear and greed. I think mostly greed. But I think, yeah, like just kind of being open to recognizing when you're wrong. And I think having plans is a huge aspect of this, right? Because if you're staying disciplined, then you're less likely to let your fear and your FOMO kind of overrun you. And I think that's why, like, sometimes it's best kind of knowing when to hold them, know when to fold them. Shout out there. But yeah, and I think, I think whatever your strategy is, just make sure that you're kind of checking in with yourself, that you're sticking to it, and that you feel comfortable in whatever you're trading too, right? Like, don't force yourself into a strategy that you don't really feel is sustainable for yourself. Like, we were talking early on too, when I kind of first started here, about personalities and why, like, sticking to your personality in some ways can kind of help you avoid more stressful trading situations. And that's why I kind of leaned into scalping a bit. And I would still say I'm pretty scalpy at heart, because that's kind of where my personality is. And I think sometimes it's harder to change your personality than it is to just kind of accept what that personality is and make that work for you if you can while trading.
Bang on.
Thank you.
All right, Pranaya, Sharif, Adira, averaging down on a losing trade is a classic example of fear and greed to a certain extent, although it might also have more to do with one's ego. Very well said. And like we've talked about, Adira and I, on the show multiple times, dollar cost averaging is not a bad thing, okay? But it must be planned, and it must be incorporated within your overall risk to reward ratio. So if you know that there are two levels of support that you like, and you're torn between which one to get into, for example, you get in 50 at the first one, you get in 50 at the second one, and then your stop has to be also based on a previous support level, and then you have to factor in, if both those dollar cost averaging, those resting orders trigger, and you get stopped out, that it fits within the overall risk to reward ratio framework that you've presented for yourself, whether that's 1 to 2 to 1, 3 to 1, 1 to 1, whatever you've chosen to do, stick with it and make sure it fits within that. So DCAing, not always bad, but it's always bad if it's not planned, unless you're just lucky. And if you're lucky, send some my way, baby. Blackberry, Sharif, Adira, yes, I learned fear has a deeper structure. My first trade was Wirecard because I wanted to stay safe. Made a lot of bad revenge trades. Fear has a structure. Couldn't agree more, my friend.
That's a really good point. And thank you for sharing that story.
Absolutely.
Everybody in the chat, thank you for sharing your stories, because I think that's like, it's really going to be personal, right? How fear or greed impact you. So I think that was a really, thank you for saying that, like people who are comfortable, sharing kind of RLs and, Ws, and how, like, I think sometimes a lot of when you do well, or when you can, at least for myself, when I can feel, proud or happy with the trading decisions, is when I stick to my plan and when I'm able to overcome maybe the influences of fear or greed.
Yeah, very good, very well said.
Thank you.
Mr. Love Shack, Sharif, in options trading, the fear and greed has an extra variable in options trading, the fear and greed has an extra variable, and that is there's an expiration date on the trades. And as a seller, you have the opposite problem than the buyer. Very interesting. It's something that I wouldn't necessarily know too much about since I don't trade options, but what you're saying makes absolute sense, especially as, those beads of sweat, those fear beads start rolling down as the expiration date starts coming in, and you're holding out of the money options, whatever, calls, puts, whatever. Hog Rider says greed is a hell of a drug. Yeah, I'm sure that's Rick James' little innuendo there, because
innuendo, great word.
Well, yeah, it's from the Chappelle Show, most likely. Michael Vega, my secret success, he says, always be 100% with losing everything and living under an overpass. I don't know if I push it so extreme.
That got dark.
Yeah, that got dark real quick. Hey, but your point is well taken.
Yeah, it's a solid, it's a very sobering point.
You have to be ready to take the L, and that's really the only way about it.
Yeah.
Trade antsy. My experience is being in a great trade, letting it run, some then fighting it in the opposite direction, thinking the price will go back to my entry. Yeah, that's something that, I see a lot of, quite frankly.
I've done that.
All right, moving down here. Just looking for some questions. Tai says, oh, that's a nice name, Tai.
I like that. I've seen that in the chat before, I think.
Did you know that Ram went on a date today? Yeah, she got all dressed
I did not know it.
She came into work, and then she's like, Brendo, I'll see you later. I'm like, where are you going, Ram?
Wait, actually?
And then she didn't tell me. I'm like, you're going on a date. So when she came back, I asked her if he was a keeper. Right? And she looked at me. She didn't give me the answer. So Ram, was he a keeper? She won't answer. All right, Ram, we're just busting chops. Tai. I totally agree. She says she's already very committed, for those out there. I totally agree. Being pressured to do good trades to pay bills is really hard in the long term. The best traders don't need money. They just enjoy it. Thank you. Oh, fair. Thank you for that. Let's see what else people are writing over here. Kenyan. Oh, sorry if I butchered your name. Sharif, I'm good at demo. Been doing it for a year, but now I want to transition to live. Great question, man. But I find myself really afraid to put a live one on. I end up putting a demo and it goes my way. It hurts. Look, the fact that you're staying in the sim for a prolonged period of time until you can prove profitability, hats off to you. But it is a big step between, look how you took your hat off. It is a big step, especially in the psychology part of things, between making that transition from paper trading or demo, whatever you want to call it, to actually live trading. But I think that the number one thing is that you can actually prove profitability in the sim before you ever use real money. If you're not making money in the sim, what makes you think you're going to make money in real life when there's more pressure on the line? So what you're doing is great. Keep at it. And I don't really have a suggestion of how to find your way out of there. Perhaps maybe take very small size, get the actual real trading in with whatever minimum amount of shares you're allowed to trade on your platform, and then incrementally make your way up. And that's what I was suggesting to Adara earlier. Nobody's really stopping you from incrementally sizing up.
Yeah. That's a good point.
Yeah,
well, actually, on that, there's another a comment here from Just Fold Pre in the chat. You will make more money trading small share sizes without emotion than you can make chasing home runs with too large of a percentage of your account. Which I think I think kind of goes off what we were saying, and I think it's an interesting analysis. I mean, everyone's going to have their own strategy, right? But I think what you're saying with regards to smaller share sizes on trades that you've thought out better, rather than just like throwing everything. I don't know what that hand gesture was, just a basketball hoop, putting that, slam dunk there into just kind of chasing a random like trend movement is actually, I think it's solid advice. And I think, each person's strategy is going to be different, but that's definitely something to think about.
All right, Tobias, here's a good one. I have a huge problem with fear at times, like when I was in all the shorts on CPI day. Woke up and all my put options were down 80%. The fear came because I had too much risk on 100% of the account. Para single dad? Oh, well, shout out to you, man. Look, I'm sorry, obviously, that it went against you that day. Obviously, the CPI kind of took us by surprise. I don't think anybody was really expecting that soft of an inflation print. Don't let that stop you, though, right? The DLs are going to come. There's just no way about it. I don't know anybody with like above 75% trading record, what have you. I personally don't. I've never met anybody with that kind of a high one. I've seen people claim to have it online. The L's are going to be there. The point is to make the L's smaller than your dubs. That's how longevity is sustained in this game. But, it's hard to say, hey, shake it off. It's just money. No, I know. I get it. That's money that's hard earned, and it's really tough to watch it disappear. The only thing I can say is, just maybe scale down a little bit after that L, try to accumulate a couple of wins, gain that confidence back, and yeah, just keep treading. China Pascal, okay, I'm just gonna say China. I always have a plan, but once the trade moves against me, I start to panic and make a stupid decision. I hate losing, and I trade options. Personally, I don't trade options, as you know, but like Adara was asking me earlier, do you get out of a position before it hits your stop? My answer is I've done it, obviously, but The trading plan does not account for that. The trading plan accounts for you either taking a profit at your profit target or getting stopped out, unless you trade in the middle for infinity, which is very unlikely to happen, right? So you have to allow yourself to take the L, and the L, your plan has to be based on a sound risk to reward ratio, right? And even before that, I don't know what your trading history is, but you have to prove profitability in the sim before you use real money. And if you haven't proved that in the sim, you know, you may be getting ahead of yourself in the process. So I have no idea what you've done so far, but let your trading plan unfold. Don't take it out just because it started going against you. You selected that stop loss because it is a sound support level. And if you don't let it come into that area and stop you out, you're really not going to know whether your plan was sound or not, unless obviously you're out and then you watch it run, which is even worse in my opinion. Sorry, keep going here. Do you want to take some of these questions?
Yeah, so I mean, I'll take them. There's some interesting insight here that I would kind of like to talk about because I think it's a good point. Go for it. Nimit here in the chat, always remember the loss is paper loss only until the time you sell. So my thing with that is I know I've been doing, a lot of reading on trading psychology this week, and I've actually kind of, what I've seen there is like when thinking like that can actually sometimes be a bit more damaging when you're trading, because if you think, oh, the loss is only cemented if I sell, then sometimes you hold on to losing trades for longer than kind of makes sense, right? So, and so yeah, Nimit, I'm not trying to pick on anyone here. I just thought that was a really interesting insight on the chat that I kind of wanted to address because yeah, from based on, we talked a little bit about loss aversion yesterday, and another aspect of loss aversion is basically the fact that our fear of actually having, losses that are set in stone or, not paper losses, real monetary losses is so strong sometimes that people will stay in losing trades for longer than they should. Yes. So I think I think the whole idea of paper loss can be kind of damaging because yeah, in a way it's like as long as you're talking and it's still above your stop loss area, but if you're below your stop loss area and you're like I can't sell yet because I don't want to lose, then that's where things can get a little bit tricky. So I just kind of wanted to address that comment because I think it's an interesting point there. Yeah, let's see what else here. Okay, I like this one from Lolo as well. Lolo. When you sell, be happy with the profits and don't get back in. Otherwise, FOMO gonna wreck you. I mean, I can actually kind of talk about that a bit with this Tesla trade I was in earlier. So I got in at 245, got part out at 246.50, and then got the rest out at 246. I was happy with this, but then I kind of got back in, and I got back in. It wasn't completely FOMO. Like I did get, the most of that move there, so I wasn't sad about that. I think more I was a little bit like, because we were seeing, we were kind of stalled a bit at this 245. I was thinking we were still in an upward channel. I got in when maybe I shouldn't have, but I got in a teeny tiny share size because I was aware that we were kind of maybe near the end of the movement. But yeah, so had I not gotten back in, we would have had more profits, like moral of the story. I did stick with my, my loss plan going in. So definitely, and again, I took smaller shares, so it was, kind of trying to check myself before I wreck myself there a little bit. But I still think that, I wanted to use that example because Lolo has a really good point. Like sometimes the movement is what the movement is, right. and don't chase a move or don't no regrets. Just kind of be happy with what had occurred, right? So I think that is, I think that's a really interesting point, and I just wanted to address that. This is actually interesting too that I think we can talk about because we kind of addressed this earlier. Thomas Johnson here in the chat. It's helpful to move your stop loss as you're making gains. Small profit is better than no profit. So I guess kind of maybe unpack that because I'm in the chat. Yeah. So are you saying kind of lower the stop loss or raise? I maybe raise the stop loss as you're making gains. I mean, I'm not really sure because that's still kind of editing your trading plan, right? Because I know you were saying if you have a stop loss, generally kind of wait till you hit that before you get out. So yeah, I'm not. Well, that may speak to a deficient trading plan. Yeah. Because you should be, I don't want to say rock solid. There's nothing rock solid about trading. A lot of it is subjective. So I'm not going to say that, but you should have a very good understanding of where the support levels are and where the resistance levels are. And if you don't, then maybe we need to revisit not so much the emotional side of it, but more the trading plan side of it so far. Sorry to interrupt you. Yeah, no, sorry. No, I appreciate you jumping in on that. Yeah, I think you're right. I think it's kind of an emotional aspect in it. But I think, I think sometimes too, I understand, the wanting to increase profit by then raising where your stop loss is. But then sometimes, as Sharif was saying earlier too, right, and just now, you can kind of risk losing more profit. So I kind of like for myself, at least to have like my plans in advance where I set my profit takers, because I am the type of person where I like to leave a piece for the dream sometimes.
Love it.
Shout out to Sharif, and I'll piece out of trades. Like I do that quite a lot. So I think like sometimes, to me, that's my way of kind of maximizing profits, because I've said, I think for myself, a lot of like where I find trading psychology comes into it for me for risk management is more trying to like maximize profits and trying to not leave the trade too early. So I think you're going to come up with your own strategies, basically to kind of address what Thomas said there. So you're going to come up with your own strategies that work. But I think as long as there is like some kind of discipline behind it, you've looked at the technical levels and you're not just jumping in willy-nilly there, diving in without checking for sharks in the water, then yeah, I think it is all going to come down to your planning, to your personality, and to your trading style. But just make sure that you do have those risk managements built in and the trading psychology.
All right, Adam brings a very good point here. He says fear and greed are part of trading, but it's price action that is one of the pillars to guide you on where liquidity is and how to act accordingly. And I couldn't agree more. I think that, that what he said there has to be incorporated as part of your trading plan, and that may change from minute to minute. As we know, news comes into the market, it changes how we're moving, but that's what a stop loss is for. That's what a profit taker is for. That's why having those things out there already predetermined, you should know what you're getting into. If you don't, you open yourself up to big losses or, not taking profits, right? Being a little bit too greedy. In the same way that you cut a trade too early, you let it go for too long, it's not part of the same problem, but they are very, very similar. All right, let's talk a little bit more here. I think it's probably good if we restart the lesson. We have
there's
3
a
minutes.
super chat here quickly, though. I'm just going to
go for that.
look at it here from Jimmy Mo Ace. Thank you so much for the $1.99 super chat. Bets starting to get attention on Reddit. Thoughts? The daily on bets looks like an upward channel, I will have to say. Like this, just kind of from around pre-market, we kind of started the channel, really took off there, up about 22%. This is like a teeny tiny penny stock. This is actually below 10 cents. Let me look at the daily on this. Yeah, like I am not super well versed in small caps. Like as you kind of see, I mostly trade like larger caps or Eli Lilly or Netflix. So I'm not super familiar, but I mean, from a purely like chart basis, on the long term, this looks rough to me. We went from like almost 70 cents in September 2023 to kind of, we took a nice quadunk here, to borrow a word that is used here quite a lot. Around October 25th, giant swoop to the downside. We are below 10 cents. So yeah, for me, I think, maybe people are excited about it in Reddit, but I have to say the technicals do not have me super enthused about bets, I have to say. We are up on the day though, but yeah, still below 10 cents. I would say it probably has to kick up a little bit more here. The chart's looking kind of sad. But thank you very much for the super chat.
All right, let's restart this bad boy over here. All right. Trading psychology. That's the theme of the week, guys. That's what we've been talking about all week. The two emotions that we've been focusing on all day are greed and fear. That they are not the only two, obviously, goes without saying, that come up in trading. There's other things like hope and regret, lack of discipline and excessive risk taking. These could be actions, but they are also parts of your state of mind. I mean, if you're taking excessive risk, if you lack discipline, these are all either something that you need to iron out in terms of your emotional intelligence with respect to trading. Today, we're going to focus on greed and fear. Trading psychology can be associated with a few specific emotions and behaviors that are often catalysts for market trading. Conventional characterizations of emotionally driven behavior in markets ascribe most emotional trading, most, not all, to fear and greed. Let's talk about some greed first. Greed can be thought of as excessive desire for wealth. I don't want to talk about all of us, but most of us want to be wealthy, right? So we can understand why that we would have that natural inclination to want to accumulate wealth. So extreme that it sometimes clouds rationality and judgment. Greed can lead traders towards a variety of suboptimal behaviors. Go for it. What do you got? What do you got? Is that more eggs in there?
Is it salami?
Salami. And I didn't put that pasta on there, but it's there.
I have to get out of this trade.
That's a really unique cornucopia
that
there.
looks really good. Is that salami or calabrese?
I don't know. It looks
Yeah.
it doesn't look. looks a little bit hot.
Okay, good, good, good. All right. So, for example, some suboptimal behaviors for greed. Yeah, that's it. I got to take that straight. All right. Where was I? Some optimal behaviors. For example, if I'm too greedy, then I'm not going to take my profit target that's based on a key resistance or support, resistance level, sorry. So if I have R1 and R2, like we talked about in pivot points on Friday, and I let them run past that, the entire position, I'm saying, not just a piece for the dream, I let the entire position run by R1 and R2, is that really sound judgment? I mean, the whole plan when I got into the trade was to take profits at R1 and R2. Let's just say that that was the plan, okay? And then I let it run because, well, it's running and I want more money. Okay, what if it turns around on me? And then I DCA, I dollar cost average at a higher low. And then it makes a lower low after that. Then all of a sudden, you know, I could have been out of the trade. I could have been very profitable, but my, you know, greed helped, you know, induced me into suboptimal trading strategies and suboptimal states of mind that I ended up giving up my profits, and probably something that I've done. I don't have an example offhand, but I can see myself doing that for sure. This may include making high-risk trades, buying shares of an untested company or technology just because it's going up in price rapidly, or buying shares without researching the underlying investment. Can't say I've done that though. Haven't bought any shares without researching. Additionally, greed may inspire investors to stay in profitable trades longer than is advisable to squeeze out extra profits or to take large speculative positions. That kind of just goes with the example that I just gave. If you had profit takers resting at resistance level 1 and resistance level 2 and you let them run because you wanted a bigger piece of the pie, well, that's on you, son. You should have been taking out that position. Yeah, I know, right? Greed is most apparent in the final phase of bull markets. And this was kind of interesting to me because it kind of goes with contrarian theory. When you should be loading up big boy, when everybody is scared, and you should be selling when everybody is over exuberant. Case in point, I'm going to mention him again. My buddy, Alfred, bought hand over dang fist in March of 2020. Anybody look at the charts of any of the big cappers, mostly every stock almost, in March of 2020. When everybody and their mother's third cousin was selling, he was buying because he's a value investor. So he's like, well, you know, the Western world's not going to turn over overnight. These companies are going to come back. I want a piece of the action. It took guts to do that. I didn't do it. He did it, right? It took guts to do that, but he was rational in his thinking, all right? In exactly the opposite way, sorry, I'll look at you in there in a second.
No, it's okay.
In the exact,
think about all
yeah. In the exact opposite way, you know, a lot of people buy when everybody's buying. And I'll give you an example. My old man, right? Back in, I'm gonna basically, you know, I'm gonna rat him out on this story. In 08, 09, gold was flying after the great financial crisis. My sister bought a whole bunch of gold, right? She made a little bit of money, and then my dad got in super late. Held that bad boy, you know, for almost 15 years before he got back into break even on that one. Yeah. And he regretted that for a long time. He was buying when everybody was way over exuberant. And that is a little bit of an issue there.
Yeah. Right? I mean, I guess there's something like that too, where you're either like, where you're kind of joining the trend, or I guess behaving counter trend. I guess it would just be like, you know, really do your research. Like, I'm sure Alfred did not just jump in all willy-nilly, right?
No, he does thorough research.
Right,
yeah.
like I think that's something to keep in mind as well, because I know we were saying mean reversion trading without kind of any, you know, impetus behind it or any basis behind it can sometimes be a little bit risky. So yeah, I think it's something to note. If you're going to counter trend, just make sure you have a plan, and B, you've done kind of your research, I would say, on that. That was just something I wanted to mention. Also,
Fair.
So I'm curious, so with your example with gold and your dad kind of buying gold and then holding on to something like that for too long, would you say, is that, I'm just trying to think, is that like fear or greed or both, right? Because you're greedy, you're trying to get in on the trend, and then you kind of hold on to it because you're fearful of the loss?
Yeah.
It's just kind of an interesting thing to think about.
You know, yeah, absolutely. I'd have to actually think about that one. I don't know if he was as much greedy. Well, I think it was probably a little bit of both. Yeah. You're actually right there. You know?
I think it's interesting how they literally are part and parcel, like they go hand in hand.
Yeah, and you know, he was doing it more for investment reasons rather than trading. So, you know, a little bit more slack to him, but the fact of the matter is he fits within that mold where he bought at a point where there was over exuberance, right? And so buying at these levels, you tend, you know, to find yourself on the wrong end of the trade. Moving on. Fear. Conversely, fear causes traders to close out positions prematurely or refrain from taking on risk because of concern about significant losses. So 2 parts to that. Closing out a position too early or from taking the trade altogether. So Adara asked a really good question earlier. I don't mean to put her on the spot, obviously, but she asked a great question. She's like, do you get out of positions before your stop is triggered when you feel like the market's shifting? Well, I mean, if I get out of the position there, my stop doesn't trigger and it runs up, you know, number one, I'm going to feel like absolute you know what. And number two, I didn't stick to my trading plan, right? And that's one of the main solutions we're going to submit to you guys about how to fix greed and fear in a second. Stick to your dang trading plan, okay? So allow it to, you know, it sucks to allow your stop to trigger and to take the L. But you're going to feel probably a little bit worse if your stop doesn't trigger and it runs in the direction that you thought it was going to run in the first place, and then you end up printing. So follow your trading plan. And then with respect to not getting in because of fear, my suggestion to you there is downsize on your share size. So take risk. Number one, never trade with money that you can't afford to lose. That's number one, right offhand. Number two, obviously you should be trading in the sim, improve profitability in the sim before you ever put real money on the line. That's number two. Number three, if it is an issue with you, whether it's because, you know, you're having a mental block at getting into these trades, whatever it is, take the appropriate amount of shares to allow you to be able to function properly so that you're not overcome with fear when you're in the trade and get out of it too soon or make irrational decisions. So you're going to have to basically find a way, somehow, to allow yourself to get into the trade. But once you're in there, stick to your trading plan, okay? Fear is palpable during bear markets, and it is a potent emotion that can cause traders and investors to act irrationally in their haste to exit the market. Fear often morphs into panic. Those beads of panic sweat starts coming down on your face, which generally causes significant sell-offs in the market from panic selling. And we've seen that before. You've mentioned, exactly. Yeah.
I'm always mentioning Medicare.
Again, if you haven't seen panic selling, go and have a look at the Netflix chart in 2022 and go have a look at the Facebook chart in 2022. And you'll know exactly what I'm talking about there. Regret may cause a trader to get into a trade after initially missing out on it because of the stock move too fast. So regret is kind of a little bit of that fear and greed. It's a bit of both. This is a violation of trading discipline and often results in direct losses from a securities price that are often falling from peak highs. So we've kind of described to you all these two emotions with respect to trading, fear and greed, but how do you manage this? What are our suggestions to you to manage those two emotions to become a successful trader? First, and I'm going to keep harping on it, I don't care how many times I harp on it, have a trading plan and stick to it. Having a definite plan while trading in stocks ensures that you stay on track and avoid any emotional impulse that may deviate from the plan. In particular, the right plan can stop you from emotion-induced over-leveraging, doubling down on a losing position, and removing stops on a losing position. Those are all big no-nos. But in case you didn't join us the first week of Learn How to Trade when we talked about managing risk, included in managing risk was having a trading plan. You need to know where the levels of support are and what your stops are going to be. How many stops are you going to have? Is it going to be 1 or 2? Are you going to get out 50% at the initial stop and then the other 50 or whatever percentage at the second stop? Where is your entry? Why is your entry based on that? Where are your profit targets? How many profit targets are you going to have? Is it going to be 1 or 2? Are you going to hold a piece for the dream? Etc. Right? Everything has to be scripted, and try to stay to your script as much as possible. That may or may not always work because the market changes intraday. If it does, then you have to allow it to unfold. If that means getting stopped out, it means getting stopped out.
Yeah, and I think sometimes too, like if your plan isn't working that you've stuck to, maybe And that's what, we're going to get to the trading journal in a minute, so I don't want to jump ahead of things here, but I think that's why like having a plan, reflecting on your plan can sometimes be really effective, because you're actually looking at like, here's what I did, here's, why I did it, and maybe this wasn't the best kind of plan. And also too, with regards to, what you were mentioning with kind of waiting until you hit your stop loss, waiting for the stop loss to trigger before you get out. I think maybe part of, like maximizing profit in that way and then not having to worry about, triggering the stop loss and missing potential profit is maybe rearrange where you're taking your profit takers, like put that into your plan.
Bang.
So that you don't have to edit your plan, to like move where your profit takers are or raise them or lower them. Like actually, maybe take more time, look at the chart. What I found helpful too, and this isn't always effective, but if you actually I learned this a lot during chart pattern week, if you measure kind of where the breakouts are, it gives you a bit of a better sense of where things are kind of going to go potentially. And then I think that really helped me plan my profit takers. And it also helped me plan my stop losses better. So I think when possible, especially if you're someone who's relying on chart and price movement a little bit more for your entrances and exits, or like lower highs, higher lows, really look at where those breakouts are and kind of use this to help mold your trading strategy a little bit there.
All right, fantastic. Second thing, put it aside, this entire get rich quick mentality. If maybe you're gifted, maybe you're lucky. Most people probably won't fit into those two categories. So it's not for a short time, but for a long time. That's how profits are made. One myth flowing around the stock market for ages now is that you can get rich overnight. However, the fact is that the stock market is a great place to grow your wealth, but in the long run only. What's going on there, Katina, man? What does that mean? Cash cow. Thank you for that.
I like that.
Yeah. The market does offer better returns than most other investment options, and I'm sure that Canadians will probably a little bit argue about the equity markets versus the real estate market because it's a rocket ship over here, but and the whole point is making money in the market takes time, whether you're long-term investing or whether you're day trading, okay? So if you wish to see your money grow multifold, abide by the patience and let your investments grow and your trading knowledge grow as well. Because, I mean, obviously, well, not everybody, most people have their long-term investments and they have their, their day trading account that they can kind of move in and out of every day. And some others, they got the swing trades as well. So you can have, it can be three. Follow your plan and don't give into any impulse for fear or greed. Lastly, keep a trading journal. As a trader, you need to be accountable to yourself while trading. You should keep constant track of your trades. With that track, you should be able to access all your trades and see whether they align with your planned goals or not. Another suggestion that I make first time around is that I obviously write in a normal journal over here, right? But this is not the only thing that you can do. A lot of websites, they basically connect to your broker, they extract all your trading data, and they regurgitate back to you some facts that you may not be aware of. I've mentioned this before. They'll give you an idea of what time you do best on your trades, what price stocks seem to be within your wheelhouse, what sector of stocks, like is it the Mag 7 or the small cap gappers that you perform best on, what time of day, etc. It'll give you all these different little tidbits. You take that information and you can write a trading journal around in addition to that. So you have data off which to work. So different things that you can do. A trading journal doesn't just mean, here's what I did, here's what I wanted to do. So you can make it into whatever you want it to be, so long as you are reflecting on the trades that you took during the day.
Yeah, I think that's a really good point. And I think to someone earlier in the chat as well was mentioning actually looking at their trades back on the chart as well, which I think is interesting too, a good supplement in addition to writing the journal. Because I think what I realized, and I really appreciate you reading your journal or some of the journal out for us earlier, because that was, it gives you a sense of we're looking at too, the journal's good for emotional levels to kind of see how we were doing emotionally with the trades, but also how, what levels did we stick to? Did we adhere to our plans? Because you were saying having the actual physical journal really helped you look back at your plan and seeing the extent to which you adhered to it. And I think also too, it's interesting with regards to the charts as well, because I think that's less kind of maybe for planning and more kind of looking back on your entries. But either way, I think it can kind of help you with improving your trading and kind of improving, I guess, for a psychological perspective, kind of looking back and kind of, hopefully improving your plan going forward. Also, sorry for the wait here. We have a super chat, $5 super chat from Parts Shooter. Can you edit and load up the video about being greedy talk? We really need that. I am not super sure what this refers to.
What? What was the question?
Can you see the super chat?
No.
Can you edit and load up the video about being greedy talk? We really need that.
Edit and load the video.
They want, we were talking about greed.
Yeah, but they can just rewind. Oh, Ram's gonna do it. So she's gonna take it. I'm assuming you're gonna upload it to social media or something. Yeah.
Thank you so much. Yeah.
Okay, so Ramina's gonna do it. She's gonna take it and she's gonna put it. I don't know whether it's gonna be on YouTube or Instagram or what, but stay tuned there. Thank you for that.
Thank you for translating that for me, Sean, because I was.
Yeah. So put your questions in the chat. We've gone through the materials a couple of times now. It's going to be Psychology Week all week, Trading Psychology Week. We're going to give you our personal experiences. We're not trying to be life coaches or anything like that, but there are experiences that we can share, and other people in the chat. Put your experiences in there. I hope I'm not asking you guys to disclose too much about yourselves. Maybe if there are some things that you're not comfortable sharing, remove them. But I think it helps a lot if other viewers see other people's experiences as well with respect to these two different fears or two different emotions, pardon me, in trading. So we'd love to see what you guys have to say. Nimit, Sharif, it's also important to have a percentage of your portfolio in a single stock and not 100% in a single stock. The more diversified, the better it is to manage P&L. Absolutely agree. We talked about that in the first week when we talked about managing risk. And one of the rules that you could have as not taking too much or only using a certain percentage of your portfolio for any one trade, any one investment. We talked about that first week, but yeah, absolutely couldn't agree more on that. Nimit, I'll send it back to you because I have to do something right now.
Yeah, let's do it. So I've seen some mentions in the chat too about Tesla. What is Tesla doing? Why is Tesla doing? So let's look at the Tesla chart. And I think Tesla is a really good example of when we were talking about fear and greed and psychology, to bring it back to what we were talking about earlier. I think Tesla is a good example of kind of a movement that I think a lot of people were kind of hopping on, and why it's sometimes kind of best to wait to see how something's going before you jump in. I did jump in when the train was flying to the upside on Tesla, so I can admit that that was not something I necessarily normally do. Obviously, it wasn't something I super planned for, because I don't think anyone kind of expected Tesla to be moving in this way, at the velocity with which it kind of did that. But I mean, with Tesla too, I still waited, I waited for this dip to the downside here. I waited till we had a little bit of support, and it did have my beak wetters and my entrances, my exits planned, right? But I still think this is an example. This could have gone really wrong for me. I will fully acknowledge. And then when I tried to get back in here, because I was seeing some of these failed wicks to the downside, I was seeing a bit of a bottom forming around this 245. This was probably an example too of, maybe being a little bit greedy, maybe wanting a little bit more from the move, even though I did already benefit from the earlier trade. So I got in, I planned my stop well, so I didn't lose too much off of that. But yeah, I think sometimes it's really best to just kind of wait and be like, why am I doing this? Is there a good technical reason for me to do this? Or am I just kind of trying to, be part of the in crowd? There's another aspect of trading psychology that I've been doing a lot of reading about this week as well, called herding behavior, which is basically, Sharif was mentioning it too, was sometimes, waiting until the trend's over to jump in. But yeah, basically herding behavior is when everyone does the same thing with the market, and that's what leads to these bubbles. When we have the dot-com bubble and then the crash. Someone also was mentioning in the chat here the tulip market bubble in Europe, which I am actually kind of familiar with. They made a movie about it called Tulip Fever. But yeah, same kind of idea. And that's a very old example. I don't remember exactly what era, what decade that was. I believe it was pre the 1900s. But yeah, people were really wanting tulip bulbs, and it kind of led to a tulip market crash. So yeah, I think it's really an example that fear and greed are as old as time with regards to emotions in the market. In terms of where Tesla is going to go now, because some people were mentioning that, I would argue we had a bit of an upward trend here. We kind of broke that trend around when I exited, so around this 11-10ish area. We kind of look like we're falling off a little bit now too, but we're making a bit of a kind of a little stagnant here around this 243. For myself with Tesla, I would say wait and see. And for people who are in Tesla, just adhere to your stops, right? As long as you have a plan, stick to the plan. Because yeah, Tesla seems a skosh hard to predict at this current juncture. Yeah, Blackberry in the chat here, I like this. Do you think the inclination towards a certain trading style is linked to our own type of fear and greed? I would say it's definitely linked to our personalities, right? Like I was saying, and I say this a lot, when I first kind of started, Sharif said, like, are you a patient person generally in life? And I would say long term I am, but short term I'm really not. And so I think that really lends itself to the way I trade, which generally tends to be a bit scalpier. I find that I tend to give in more to greed or fear when I'm in a longer term trade. And I think that's because, I'm like, having these specific benchmarks that I'm really hoping for it to meet. Maybe I don't plan it as well. Maybe I just kind of jump in because it's kind of what's happening. Whereas when I scalp, because I think with scalping, it does require a bit more planning, and it's also, I know it's going to be shorter term, right? So I'm a little bit less stressed about the movements because I'm already out before I have time to stress, right? So I think, I would say certainly, I wouldn't necessarily say like our certain inclinations toward trading styles is linked to fear and greed, but I would say there certainly does play a role with regards to personality. And I think maybe we're more likely to avoid giving into fear and greed, at least in my case, I would say this is the case, if you trade closer to what your natural personality is. So I think understanding your personality is a really big part of that. That is my take on that question. I really appreciate that question. Also, this is pretty funny from Mr. Love Shack. The only thing bigger than Sharif's trading journal is his workout journal.
Oh, that is true.
Yeah.
That is quite accurate. Sadly, though, I do not journal my workouts.
Oh.
I probably should. It's all up here because it's much easier. All I know is reps and sets.
Yeah.
Oh, what did I do there? Reps and sets. All I can tell you is that the theme of my workouts as of late is volume, and more volume. Lots of sets, lots of pyramiding up, staying at the top at a working working weight, and then pyramiding back down, and I do that for every workout. Sometimes I'm actually at my working weight, I stay like 6 to 8 sets.
Yeah, I like doing that too, where like you
insane.
kind of like start warm up and then go higher and then kind of go back down, right? Yeah.
It's
something.
volume, and more volume. By the way, we're going to be talking about volume very soon. On balance volume, accumulation and distribution. We're going to get to all that kind of stuff. These are excellent leading indicators in future episodes of the show.
Yes.
So make sure to stay tuned for that. So we've already gone through the materials a couple times here, Dara, and I would love to hear some more questions from the chat with respect to any of the things that we've talked about.
Because you were not here because I saw this in the chat. I'm curious. Do you know about the tulip mania that happened in the 1600s in the Netherlands?
Hold on, I have heard about something like
the
this.
tulip bubble. Yes,
Yeah,
someone mentioned
ridiculous.
it in the chat,
And
then
went
I was like, I actually
100-fold in price, right?
Yeah, I've heard, because I was
this.
familiar with the tulip bubble because they did make a movie about it called Tulip Fever in, I believe, 2014. But yeah, so I kind of wanted to Tulip 2014, 2015. But yeah, I just kind of I was curious as if you were familiar with that.
I have heard about it, yeah.
Yeah, no, I'll go in like little rabbit holes where I'll like get really I'll be interested and curious about stuff. But yeah,
fair.
Thank you. Shout out to the people mentioning Tulip Mania. In the chat, and yeah, Snowman telling me it was the mid-1600s. So yeah, very cool. And I think why I thought it was interesting is it shows how long fear and greed have really been pervasive.
Oh yeah.
They're an inherent part of any kind of buying or selling or market action.
Dang.
So I think, yeah, being able to understand them, and along with all these other inherent psychological factors that might, mess with our brains and impact our trading is, I think, very cool. And I appreciate that people are jumping in on the discussion there.
Yeah, and making connections between the things. Ice Sniper 33.
That's a great name.
Bitcoin is the new tulip. Yeah, well, Bitcoin, Bitstonk having its moment in the sun. $43,125 is where we're at now. It is an absolute rocket ship on Bitcoin. Where is my chart at here? We need to show BTC. 48,000 and 52,000 were the levels that I charted there the other day. Look at Bitcoin, man. Katina, man, are you seeing this? 43.
Oh my God.
Yeah, 43,381 high, so it's off the highs already. The closing print yesterday was at 41.8 and change. So we've blown through that. This is the daily candle, guys. This is not an intraday look here at Bitcoin. Bitcoin has been insanely strong. We're gonna have to go to the weekly here to find support and resistance. What the hell is going on with this
These
chart,
crypto
bro?
stocks are really strong too right now.
When it comes to this, man, it shows, oh, there we go. Okay, here we go on the weekly. All right, so right here, this is what I'm seeing, obviously, as the next resistance level. That's that 47,849, which is essentially 48,000. You know, it's going to be a bit of a zone between 48 and 50 because 50 is going to be a bit of a psychological level, right? So we're looking at that. And then above that, we're looking at about 52,000, the top end of this wick over here. And then, you know, now we're talking about 60 to 70 in that vicinity. But great look. That key resistance level, though, staring at me in the face, 47.8 or 48. Give around that area there. All right. Yeah, I just wanted to mention Bitcoin because it's doing real good here.
And people are making some really cool connections in the chat between Bitcoin and what we're talking about with fear and greed. Yeah. Which I think is a really good point, and I really appreciate, you know, we're kind of trying to connect things here, right, to the market.
What do you think about Bitcoin? You've never given your opinion on Bitcoin.
I don't, honestly.
Before you got here,
yeah.
Did you know anything about Bitcoin?
I knew of Bitcoin. I'm not going to lie. In my brain, I probably conflated Bitcoin and NFTs a little bit because I didn't know that much about either. My main knowledge of NFT actually came from that SNL rap, if anyone knows that, with Pete Davidson. I'm doing like the Slim Shady thing with NFT.
That's awesome.
But yeah, so I don't actually I don't really like to opine about things if I don't know enough about them. Yeah. I would say doing like the crypto update every day is giving me a bit more knowledge of Bitcoin and how it moves. But it's interesting too that a lot of these cryptocurrencies do not really move in tandem with one another.
No.
Like sometimes Bitcoin and Ethereum will kind of move together, but Solana does its own thing 21.
Oh yeah.
Like all the time. Solana most of the time is like a beast, but and it's interesting. I find they don't always move together, but usually if one of them is kind of consolidated, they're all kind of consolidated.
They are.
Notice they tend to consolidate together, but they don't really tend to run together unless it's Bitcoin or Ethereum.
Interesting.
In my very limited experience, but yeah, it's honestly not something that I really know enough about to really make a true opinion on. But the volatility of that market would give me a skosh of anxiety.
Fair.
That is, yeah, and I cannot wait until I learn more about you know, the world of crypto and Bitcoin, and then I will be able to have more of an opinion.
Yes.
Also, Sean is long GBTC.
Bang.
In the chat, so I just wanted to shout out to Sean.
Multiple great names today. You got MicroStrategies 3%. You got Coin 3 and 3/4. Mara's above 7% now. Riot's at 6 1/3, 6.5, give or take around there. BITO, BITO, the futures ETF is at 3.95, 4%. So you've got a lot of great runners today for the equity-related names for BTC and crypto in general. Bitcoin just broke 4%, guys. We are pumping up to highs here. New high of day on BTC, 43,465. BTC, the gift that keeps on giving. There's the look, the intraday look. We just made that new high, 43,500 now on Bitcoin. What a squeeze up. This morning we were talking about 41, the low overnight, 41,429. Now we're talking about 43.5. It's been a great look on BTC. It's like, is it 2021 again? What's going on here?
Well, no, because it was funny because yesterday morning, like before we got on camera, we were talking about this, and you were like, oh, like for months we were in like the 30s, and I was like, when I started, we were in the 20s. Yeah, and you were like, huh? Like it's crazy how quickly it's moved, and I think, you know, honestly, I feel very blessed and very privileged in a way to be able to start kind of following the crypto market when it's going so crazy, right? Because I think it gives me a very unique perspective on how quickly this thing can move.
Are you looking at this? 43,759, man. It just squeezed up more. This thing is really going, guys. 4 3/4. The volatility is really picking up here on BTC. Is that the Chilean Nightmare doing that? Who's doing that? Yeah, I thought he figured he's excited. I asked the Chilean Nightmare, I'm like, are you still holding? He's like, no, man, I bought a new car, man. I got to deal with my new car, right?
Congrats on the car.
The Chilean Nightmare is a print factory over there.
That is
$44,000. We 43,995. Bitcoin just touched 44,000. This thing is absolutely rocketing up. We just moved $1,000 in 10 minutes, Adara. Wow, what a move up for BTC. Now I'm going to have to see all my BTC friends start posting on their stories again.
You have I like the BTC friends.
They're just normal friends, right? That are Bitcoin bulls. And they went silent, Adara, for like 6 months, maybe even more. And now they're all coming out of the woodwork and like they're, yeah, I told you to hold BTC. There's that. I was like, oh God, here we go again.
I mean, I just, yeah, you know, because there's friends like that for everything, right? You have friends who are really into a certain certain trend, and that thing pops up, and they're like, oh, like the Swifties are, I guess, another class of 100%. Type of individual that might be like that. Also, Darwin in the chat here, I want to address this because I think it's interesting, and I think it's a good discussion, and it very much relates back to what we're talking about. Greed is good, yay or nay? I would say, I mean, I think we're talking about, like, fear and greed are essential to the market, but it's about how you manage them that is really important. So it's always going to be there, but I think to an extent, like, the idea that, you know, I know Sean was saying last week, like, what was it? I don't want to paraphrase it wrong, but like the whole idea that you can't be a fearful trader. Yeah, a fearful trader is an efficient trader. Yeah. Right? So I think, like, you know, obviously we need greed to some extent to motivate us to enter trades, right? To overcome fear. But you don't really want fear or greed taking the steering wheel too hard. You know what I mean? Like, you kind of want to be able to drive the car yourself and not let fear or greed or emotions overrun you, which I think is like a huge aspect of psychological trading, and why I am really happy we're talking about it this week. So thank you for bringing that up.
Yeah, absolutely. I'm going to have to go and say, you know, a happy middle. You obviously have to be greedy and allow, basically, to have profit targets. Otherwise, what's your motivation, really, right? So I would say, you know, it's just like the aggression of a boxer, the violence of a boxer. You want a boxer, you want controlled aggression, right? You don't want crazy amount of aggression because you expose yourself to punches, and you don't want lack of aggression because then you're just a defensive fighter who doesn't throw any punches. So you need a happy middle in there. I think that would be my personal answer to that.
Nice.
But yeah, what a great move by Bitcoin here. You know, what a move. We just touched 44,000 live. We haven't been up here in I don't know how long. When's the last time we were up here on BTC? But it is an absolute rocket on the day. And yeah, if you're participating in this, I'm very happy for you. Never bought Bitcoin, never bought any sort of crypto myself.
Yeah, I was going to say, what are your thoughts on crypto? You're not a crypto. Oh.
Chilean Nightmare didn't like that.
You're not.
That's
I don't like he's still doing it with like this great face. You can't even tell. He's just so focused, just doing it.
Yeah, I've never bought any sort of crypto before. I don't even have a crypto account. The Katina man, he told me which one he uses, so maybe I'll bamboozle my way onto that platform. We'll see. Yeah, he uses FTX. He said no. He's kidding.
That's the line of the day.
He's kidding. He doesn't use FTX.
That was the timing on that was.
Can you imagine if you used FTX? You'd be running after your money right now. Were they even in Canada? Was FTX in Canada? No, not that I remember anyway. Justin Time says, I'm surprised. Yeah, I've never bought any sort of cryptocurrency of any sort. I was really interested in Ethereum because of the digital contract aspect of it. I thought that was very utilitarian, and you could use it rather than just, you know, having it as a digital currency. There was another.
That's an interesting way of looking at it.
Yeah, it was. Because, like, for example, what I like about it is, so right now, I own the rights to this piece of art, or I own the rights to this piece of property.
Oh yeah, the NFT thing, yeah.
So it's not just an NFT, right? Like, I could actually send you the rights to my property, like, say, a deed, right? We don't use deeds in Ontario anymore. We have the land titles registry now.
That's very cool.
Yeah, and it would be a way of having it instantaneously done because of the blockchain, right? Whereas if we do it through the government way, there's all sorts of problems that can happen. Yeah. That's why you get title insurance.
And it's more direct too, right? If you're dealing with individually.
Right. Yeah. You know, it would avoid things like having to get title insurance on a home, right? All that kind of stuff would get negated, and all those expenses, you know, would be done with. They'd be historical.
Yeah, and I understand, like, too, like, from a legal perspective, why that's interesting, right? Like, why that would be an aspect that would be interesting.
That's how I see it.
Yeah. Well, no,
so what? Tell us.
GBTC.
Affirm. So the Katina man is still holding the Affirm short that he started in the morning, and now he's $1 in the money.
He is affirming the gain.
He's affirming the gain. Yeah, you had to do that, but I do it. To the point, Sharif, I'm up 70% on BTC, but I'm also up 190% on TGT options and 220% on DG options. Dollar General, damn.
Dollar General and Target.
Okay, ooh. Okay. It's all about the perspective. Shout out to you, my friend. Very happy that you're printing, and hold on to those profits, man, and, you know, reinvest that bad boy. And I hope you print again and again and again. Obviously, I'm very happy for you. Don't let my face fool you. I'm just joking. BlackBerry. It's not only ETF hope. Next year, is that Bitcoin halving. Yeah, I keep talking about that. Before that and for some time after that, it was always ripping. Yeah, that's kind of like a phenomenon that happens with this the halving events, is that you're going to get a nice big run up into Bitcoin, and then it's not a sell the news event, but you just get the move up prior to that. In case you're wondering what halving is, every so often, I'm not sure what the interval, the time periods are, but the amount that the miners get in terms of Bitcoin for doing the mining and the calculations or whatever their computers are doing is halved in half. Halved in half. That's like saying like Obi, he says distinctly different, which I find to be hilarious.
I love that.
Yeah.
You know, Obi's sayings are all great.
Oh yeah. Oh boy. Yeah, it's halved there, and that. Because of that, obviously, there's a scarcity issue there. Yeah. So
I also never realized that he said "oh boy" until you just said it, and I was like, "Oh yeah, there you go."
Yeah, he says, "Oh, is he there?" No, he's like, "Oh boy." All right, guys, let's bring it back on topic. Let's bring the topics back and the questions back to our theme of the day. The theme of the week, obviously, is trading psychology. Today, we're talking about fear and greed. Before we redo the materials, let's get some questions in the chat and or experiences that you may have had that you are willing to share. I'm sure other traders would be really happy to see what your experiences were and to learn from them. JMac82, JMCK82, that's a fantastic name. I used to have a buddy called Jean-Marc, and we used to call him JMac.
Jean-Marc,
yeah.
great name.
Sharif, I feel it's important to inform new traders about options. They are statistically stacked against you. There is a time and place for them. Okay, I'm not agreeing or disagreeing with you, but thank you for your comment. I can personally tell you that I don't have experience with options, and any discussion that entails that, I respectfully don't participate in because I don't have enough experience. Yes, Darwin's mentioning the fear and greed index to trade, say, buy during extreme fear. That's kind of the point I was trying to make before. When you have the extreme greed is, usually not a great time to buy. It's usually the best time to buy when there's extreme fear. And I use the example of the March 2020 during COVID. 2022 was essentially an entire year of that when you had the Mag 7 pull off 50% off their highs. Goodness, Microsoft, what was Microsoft at? $225? Katina, man, where'd it get to? Got to like 225, 250, 240, something like that. Softy, 2022. No, the low in 2022. Remember, we were tanking. Lower than that, he says. Yeah, likely. I wouldn't be surprised. BlackBerry, Sharif, can we talk about the fear and greed index? How does it work? How do they do it? Yeah, that's not part of the topics today, but it is obviously, something that you can. 214, the Katina man says, was the low of Softy in 2022. So look, Softy's at 371 right now. So you do the math there. All right, guys. Adara, you want to go through it this time?
Yes, let us talk about fear, and we'll talk about some greed. Fear and greed in Las Vegas.
I love that movie. What a good movie that
Fear
is,
and Loathing.
man.
Yeah, great movie.
Great movie.
I was like, I can't not reference that. But yeah, so basically, trading psychology, we've been talking about it all week, and it can often be like pinpointed down to a few emotions. Maybe this kind of makes sense, like emotion psychology, but really, conventional characterizations of emotionally driven behavior in markets ascribe most to emotional trading to either greed or fear. So greed can be thought of an excessive desire for wealth. Kind of makes sense when we say it out loud, and it's so extreme that it sometimes clouds rationality and judgment. And yeah, like that's why really, if you don't have a plan, sometimes things can go awry with trend chasing, trying to chase the movement, and often that is driven by greed and the interest in more profits, which makes sense, but it can also lead traders towards a variety of suboptimal behaviors. And so this could include making high-risk trades, buying shares of an untested company or technology just because it's going up in price rapidly, jumping in on trends without properly researching or properly planning the trade. It can definitely go awry. And additionally, greed can inspire investors to stay in profitable trades longer than it is advisable, to eke out some extra profits or to take on large speculative positions. Like that's where sizing also plays a role in greed, where you can go like way too ham on a share size, and then you can kind of be in a little bit of an unfortunate position. And greed is most apparent actually in the final phase of bull markets. And this is something new that I learned because speculation can kind of run rampant and then investors throw caution to the wind. They jump on the train as it's like, driving away, all the bulls run in little packs and then things can go a little bit awry. Like, we were talking about the dot-com bubble a lot and we were talking about risk management. And I think, another example of greed, we see these trends. Like you were saying to me, if a company had like .com at the end, people would buy it like mad.
Right.
So definitely an interesting time. But fear, conversely, is actually what causes traders to close out positions prematurely or to refrain from taking on big risks because of concerns about significant losses. So in the way that greed will motivate us to, buy excessively, perhaps to, motivated by gains, fear makes us act in more protective ways to minimize potential losses. And either way, they're, kind of extreme reactions because they are kind of extreme emotions, right? And fear is especially palpable during bear markets, and it's a potent emotion that can cause traders and investors to act irrationally because they really want to exit the market. So in greed, when we have the bulls running up to enter the market, fear, we have the exact opposite, people really getting scared, trying to exit, and often it morphs into panic, which generally causes significant sell-offs in the market from panic selling. Or it's like what can cause you to leave a position too early, even if it's a strong position. I had this a lot when I first started. A position would drop a little bit and I would freak out and run for the hills, even though it was, maybe a decent trade. And so regret can cause a trader to get into a trade after initially missing out on it. So if you miss the move, you're getting FOMO, as we talk about a lot in the chat here as well. Fear of missing out. Fear is, it's part of the, sorry, that was so dumb. Fear is part of that acronym, you know what I mean? So FOMO trading maybe also relates to fear and greed, I would venture to say. And this is a violation of trading discipline and often resolves in direct losses from security prices that are falling from peak highs. But also, fear can cause you to miss out because you leave the party too early and the party hasn't even really gotten started. It was fine. It was still part of, your trading discipline where you set your outs, but fear caused you to leave. And when I say you, I definitely mean me because I do this a lot. I think I'm getting better about it, but I definitely, when I first started, and that's why, it's really cool to see everybody's trading stories in the chat as well. Because when I first started, the second things dropped a little bit, I'd be like, oh no, I have to leave. So that's why having a plan is really important. And that's one of the biggest parts of managing fear and greed to become a successful trader. Having a definite plan while trading can make sure that you stay on track and avoid any emotional impulse that can deviate from your plan. So in particular, the right plan can help from emotion-induced leveraging, doubling down losing positions, or removing stops on losing positions, or even like removing stops on winning positions. You know what I mean? Like you want to win so badly, you're like, oh, well, I'll ignore my out. I'm just going to ride this high, and then the high drops, and you're left in this position, kind of with no areas of support, right? Which is why planning is so infinitely important. Put aside your get rich quick mentality. So one of the myths like floating around here is the idea that you can get rich overnight. That is not the case, and that's a bias I came into. I assumed that trading was like because like a lot of what you see online and a lot of what you hear about it is like, oh, Wolf of Wall Street.
Right.
All of these people making crazy money on trading. But trading is hard. It takes a lot of hard work, and the market does offer returns, but it takes a lot of time. So if you want to see your money grow, you have to really be patient, stick to your plan, and do not give in to impulses of fear and greed, because that can get you in a bit of a sticky situation. Also, make sure to keep a trading journal. It's not something I do yet, truthfully, but I was, very inspired by seeing Sharif's trading journal. He talked earlier about how that's really helpful because it helps you keep you accountable. You're accountable to yourself. You know what I mean? Like if you're setting a goal and then you're able to look back and be like, I was adhering to a goal, it can make you feel really good about how you're trading. And if you're not, it can be really, something to reflect on. But also making sure, as Sharif said quite astutely earlier today, don't be too hard on yourself either. Oh, thank you.
I'm down there with the source Adara. I like.
Appreciate that.
Go on.
But yeah, so I think it's really helpful to not be too hard on yourself. It's just more kind of a way, and it can even bolster you. If you know you're doing something well, it can kind of help you be like, oh, I did that well, something I working on, but it also can give you things to be like, I didn't do that the best. Don't dwell on the losses, just kind of hopefully learn from them. And I think the trading journal, as you were showing us, is a good example of reflecting on your emotions from the trade, and then maybe taking stock of those as well, pun intended, and then also looking at the fundamentals of the trade.
Right.
Like, did it work on a technical level? How was my plan? Did I stick to my plan? Was the plan solid to begin with? It can really let you look back on those. And it also gives you the ability to rebalance your portfolio if required. But yeah, don't give up on learning, because no one is going to learn overnight. Like even Warren Buffett, who is,
Big Warren.
93, always reflecting on, knowledge and losses and everything. I think all these investors are, everyone, learning does not end. Do you know what I mean? And that's why we're all kind of learning together here.
Absolutely.
On how to trade. But yeah, as a trader, you need to be open to learning about the market's fundamentals, learn from yourself and what you have to
But
gain
perfect
there.
segue. I just want to interrupt you.
Yes, please do.
Because you mentioned Warren Buffett, so it had me thinking, this is not exactly to do with fear and greed, but more with expectations. One of Charlie Munger's, one of my favorite quotes for Charlie Munger, and I put it on my phone so I can really internalize it. You can't read it, but I'm going to read it out to you guys. He said, "The first rule of a happy life is low expectations." That's one that you can easily arrange, meaning that's one rule that you can easily arrange. And if you have unrealistic expectations, you're going to be miserable all your life. And I think that should be incorporated. You should really internalize that with trading, because if you come here, again, Adair's going to talk about this in a second, with that get rich quick mentality, because you have unreasonable expectations or you have unreasonable perceptions of your ability to maneuver around the markets, you're going to be humbled really quickly. And it may cause you to be miserable, like Charlie said. So make sure your expectations when you get into this are, they're reasonable and they're sound. And they're not just these hopeful things.
Yeah, like hopium, which we talked a lot about during risk management, is very real. And I think also what can lead to excessive greed in the market. Yeah, because as I was saying, earlier, like getting rich quick is not a reality. And you have to kind of maybe think about it as getting rich smart. I'm going to use that as like a dumb, my pun or saying of the day. Really, like think about your trading plan, evaluate, constantly reflect back, and kind of make sure that what you're thinking is making sense, right? Because that's how you can kind of combat the pervasive fear and greed within the market, and actually see like, hey, do I have a strategy? Does the strategy make sense? And mastering emotional trading is a really hardy challenge. We were even having discussions yesterday in the chat and amongst each other whether it's even possible to fully master emotion, but I think managing it and being aware of it is really important. And that comes from introspection, that comes from adopting methods, that comes from reflecting on your methods. Do my methods even work? Are they valid? What's going to be valid for one stock isn't always going to be necessarily valid for every stock. And personality plays a huge role. Like, what is my personality? How is my personality impacting my trading? Like, that was something we talked about a little bit earlier too, right? But the biggest thing, regardless of what strategy you use, regardless of your trading acumen or what you're comfortable with, the big thing that matters is not letting your fear or greed overpower your judgment. And that actually brings me to a question here in the chat that I saw that I'd like to address. Not really a question, just kind of more a statement here. Rob EV, solution to FOMO, reevaluate the trade. Does it still make sense? And I would agree, like if you still find a point of entry, then, and you still have a plan, like a stop and an out, then I think, you can enter a trade. But if it's like you fully missed the boat, if you're at high of day, maybe wait a little bit. You know what I mean? I think that's a really solid response here, Rob EV.
Absolutely.
So thank you.
Absolutely. You get through that? The whole
I
thing?
did, yeah.
The trading journal, everything, there we go.
Yep.
We're wrapping up. Fantastic. Guys, any questions for Adaira and I with respect to, our experiences or anything that she may have spoken about or I may have spoken about that you want some more clarification on? Feel free to put it in the chat. We would love to answer your questions, have a back and forth like always. If you have something to add with respect to a personal experience that you have that you think others in the chat may benefit from, please put it in the chat as well. I see an interesting comment here from James Dell. I was just talking with my son about this and his piggy bank. You're actually losing value with cash just sitting there in the piggy bank. No question about it. We are in an inflationary environment, and unless you're getting some yield upon that cash, it's devaluing. But I want to digress quickly because there is this body of thought right now that takes us back almost to the 1980s. The early 1980s was a period characterized by extremely high rates. And what that did was by accident, create a bit of a wealth gap. Because those who had cash and were able to leave in the bank were printing up the you-know-what. There was rates like 10%, even higher at the time. I think for a brief period it was like 14 some odd percent. So those who were carrying a lot of cash, who had cash, really created wealth. In the exact opposite way, conversely, those with a lot of debt at that time really, felt the strain of higher rates. And to some extent, that applies today. If you're carrying a lot of debt and you're having to service that debt constantly at these higher rates, rather than having a lot of cash, and I know it's really easy to say, get rid of your debt, carry cash. And that's not what I'm saying. But those who actually have cash and can utilize that cash, it kind of creates one of these environments where we're kind of creating a bit of a wealth gap as well, because the people with cash are earning higher rates on their cash, whether it's through short-dated treasuries or whether they're getting, in Canada we have something called GICs that pay 6.25%. I saw one right now. If you hold it for 3 months or 6 months, you're getting 6 points annualized obviously on your money. Whereas if you're carrying a lot of credit card debt, you probably noticed that those credit card statements are coming a little bit higher because the rates have gone up on them. I know on one of my credit cards, the rate went up from like 23.5% to almost 28.5%, right? And we're knocking on the door of 30 there. So that is something to be mindful of as well as, as we navigate this higher rate environment. Yeah. And it just kind of reminded me about that right now when you mentioned
That's a good example, yeah.
Yeah. All right, so let's see what else. Benton, Sharif, thoughts on PCT, down 10% after the pop this morning. What is going on here? Who's messaging me? Really annoying. It's not Alfred. I take in messages. Let's have a look at PCT. All right, I don't know anything about this company. Pure Cycle Technologies is sub $1 billion market cap. They make purification recycling technologies by Procter & Gamble. All right.
Oh.
127 million share float. Can you come to the chart, Ramran? What's the daily look over here on PCT? Kind of consolidative ever since that big move down. Looks like they launched in early 2021, and it's been down to the right since then. The consolidative period here kind of started around early 2022. We've been locked in this $11, $10 area to the high side, and about $4 or $5 to the low side. We've recently broken that $5, $4.50 support, and now we're using that level as a resistance. So I don't like this as a long for a couple of reasons. One, we're below the 50 and the 200. You've got the death cross over here, but we're in a consolidative area, so maybe I shouldn't put too much stock into that. What I would really need to see here is a definite close above 5, right, and a holding of 5 as support, because it was being previously held as resistance. Sorry, as resistance because it was previously being held as support. Sorry, kind of got those two mixed up. That's what I'd say. Otherwise, I don't know too much about this company. Sorry, I couldn't. Command, yes, I see Command. It's been running today, but we're not going to get too much into stock picking, guys. Bring in the chat more questions or comments with respect to what the subject matter is, and we'll be happy to answer those for you. Benton C. Awesome, thank you. It's a new name to me, says Benton. All right, not that I know too much about it, but I would like to see 5 hold as a level of support. Perhaps give it a little bit of time to prove to you that it's holding that $5 support level. Ganesh, yes, saw that already. JJ says, but rates for the past 15 years have been abnormally low. I think we are still below the long-term average in rates. So you're absolutely right. You're absolutely right. The 2010s was characterized by, quantitative easing and abnormally low rates. Whether for the good or bad, it's what already happened. And now you have an entire generation that really doesn't know anything but low rates. And maybe they're in for a rude awakening. Maybe not. Maybe we start cutting big in early 2024, mid 2024. We'll have to wait and see. It's kind of like, depending on who you ask, some people say, they're not going to cut rates until something breaks. Well, something broke already. We had the what's it called? The regional banking crisis back in March, and they continued to raise after that. We'll have to wait and see if anything bigger or more substantial breaks before they really start cutting rates. Well, only time will tell, but it's been very interesting to actually watch this unfold, because I previously didn't have too much experience in this kind of stuff. The good story. You want to have a look at Pfizer for the good story?
Yeah, let's do it. Pfizer has been an interesting one, to say the least. I have not looked at the chart yet today. Let's look at Pfizer. But I have no problem trading like pharmaceutical names. I trade a lot of Eli Lilly. I've gotten in some Novo Nordisk. Pfizer, yeah, I mean, downward channel, I would argue, with reference, to our past discussions on chart patterns. I'll actually just draw it out here, because why not? Swoop. Oh, there it is. No, okay. I'm struggling at the drawing today, but it's a downward channel. I will not belabor the point because I cannot draw. But yeah, this is a downward channel. We did a movement down. We had movement, further down here. Is there any specific catalyst on this one today? I'm going to check because I know with Pfizer recently, we had the news with the weight loss drug that they had to pull because it did not do super hot. I want to look at the daily on Pfizer too, because I think it's really gotten lost in the mix of the Eli Lilly and the Novo Nordisk. Yeah, I mean, ooh, this daily chart is a little sad.
Hasn't been good.
It needs, I think it needs a little bit of TLC, Pfizer. We've been in a downward channel for a decidedly long period of time. Yeah, we're hanging out at this 29 level. Yeah, Pfizer looks a little bit rough. On the daily, I would also say downward channel. I wish I had more positive things to say about this stock. But I mean, if we might be breaking this channel on the day, I would definitely wait for confirmation though, because the general outlook seems to be like it is in poor health. I'm so sorry. There we go.
Oh, it's okay. I'll give my little 2 cents on this one as well.
Yeah, please do.
I like the $42 level here, and I know we're far removed off it, having broken 30, but look how many times 42 plays an important role, whether it's here, 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 and then again over here as a level of resistance. Prior to that, it was support. Here it was resistance. Over here in these two areas, it was support, and then you actually broke it to the downside. 42, very important level for me. If you reclaim 42, well, if we even get up to 42, that'll be very interesting. Now, a couple of things with this one. It's a second weight loss trial that they've canceled on the year. One was canceled in June. That was a once daily tablet on a different formulation. Now, the most recently canceled weight loss drug trial was on 2 a day of their current formulation. Now they're going to bring that back down to 1 a day on the new formulation. However, we haven't seen anything from that test yet. But if you take what some of their chief research officer says, apparently the gastrointestinal issues, which are the main side effects being presented here for that twice a day pill, it gets a lot better when you narrow that or you reduce that to once a day. So a third trial coming up here, that may be more promising. Look, if you're in a speculative, who knows where the bottom is on this? And that's the thing, right? So you can punch in long here, hoping that that the new trial for the once a day dose will be a lot better, but you don't know where the bottom is going to be. Well, I mean, obviously it can't get worse than 0, but I would wait for some confirmation that this one is trending back up and at least holding some support levels, because right now we're making lower highs and lower lows throughout the year. It's been a really bad year for Pfizer. We kind of were at that $55 area to end off last year, but it's been completely counter-cyclical, whereas 23 has been very strong for most of these NASDAQ stocks. It's the exact opposite for Pfizer. Look, if you're feeling risk inclined, or you're trying to do an arbitrage trade, this might be your candidate right here. Not financial advice, obviously, but I thought I'd give you the picture as to what the current climate was on this.
Yeah.
All right. Map says, I've never seen a weight loss drug run nor work, for that matter, usually huge side effects. Well, I mean, the ones that we're talking about are Ozempic and Wegovy and Mounjaro, I think, whatever it's called. And, depends on who you ask, but they seem to be well tolerated. The question is, what are the long-term side effects of this? We haven't had these drugs for all that long. And I know it was like an off-label use, essentially, they were being used for. They were actually for diabetes. Mm-hmm. And then, they noticed, oh, it's causing weight loss.
There was the celebrity boom where everyone was like, oh, Zempy face or whatever
there you go.
At the Oscars.
There you go.
But yeah, so I mean, It's been quite a journey.
Austin Coy is being coy in his statement. Peloton works for weight loss. Shout out to you. Yes, it does. Who knows how long they'll be in business for, but yeah, Peloton does help with that. All right, guys, it's 1 o'clock. Let's cycle back through some of the material. I'll go through it again this time, talking about 2 different psychological states of mind today, specifically in the trading context. You probably guessed it from what you see on the screen. We're talking about greed. We're talking about fear. They are not the only emotions that are obviously relevant to trading. Discipline or lack thereof, risk-taking or lack thereof are also 2 important states of mind. Hopium and regret are, hope, obviously you know what I'm going at here. Hope and regret are also 2 other states of mind that you can kind of maybe even factor into fear and greed. Those are obviously important as well, but for today's context, we're talking about greed, we're talking about fear. With respect to greed, you can kind of define that as an excessive desire for wealth. That's not a bad thing to have a desire for wealth, but an excessive desire for wealth basically can cloud your rationality and your judgment, and basically what help prevent you or cause you to deviate from your trading plan. Greed can lead traders towards a variety of suboptimal behaviors. You don't want that, do you? This may include making high-risk trades, buying shares of an untested company or technology just because it's going up in price rapidly, like a small cap gapper, right? We all see those bad boys moving every day. All of a sudden, oh my God, CMND is up 100%. Let me buy it.
Or like that Tempest when that was 3,000%.
Remember that?
That would be greed in a ticker.
There you go. Or buying shares without researching the underlying investment itself. These are all things that can be caused by greed, where you have too much exuberance behind one name. Additionally, greed may inspire investors to stay in profitable trades longer than advisable, to squeeze out those extra profits, or to take a large speculative position. And we talked about this. You'll recall Friday's lesson was based on pivot points, and pivot points included in the actual indicator itself the pivot level, and then above that you had 2 resistance levels, and below that you had 2 support levels. So if you let the trade run past those resistance levels and you don't take anything out, yeah, you're probably being a little bit greedy here, especially if your initial trading plan was to take those profit targets out. It's okay to hold a piece for the dream and let it run to see where it's going to go, but if you hold the entire thing and then it comes back against you, well, then you're probably more motivated by greed than you are by ration. Fear, conversely. Fear causes traders to close out positions prematurely or to refrain from taking on risk because of concern about significant losses. And that's what, I hate to keep harping on the example that Adara asked me earlier. She's like, well, do you take out positions before they hit your stop loss? And that would be characterized as taking out a position too early. If you have followed the correct trading plan, then you should have earmarked the support level, a clear support level, as one of your stop loss areas, right? If you don't allow the stock to come back and bounce off support, well then, first of all, why are you charting that area as support? I mean, it means nothing at that point. So you have to allow the trade to develop. If that means allowing it to go against you and to get stopped out, then that is the trade. The point is to have a proper risk to reward ratio, right? So that you're able to have a profitable, quantum of trades. If you're going to do a 2-to-1, right, then basically what you're looking at is a 50% win ratio, and you'll be profitable, so long as your losses do not exceed your winners. And that's the whole point of having that risk-reward ratio. If you want to know more about that, check out the previous lessons. The first week when we started doing this, called risk management, we talk all about that there, okay?
Indeed.
Fear is palpable during bear markets, and it is a potent emotion that can cause traders and investors to act irrationally in their haste to exit the market. Fear often morphs into panic, which generally causes significant sell-offs in the market from panic selling. Yeah, and like again, I keep talking about this. You want to see what panic selling is, look at Facebook's chart in 2022 or late 2021. Yeah, no. 2022, sorry, I'm losing my marbles over here. Look at Facebook's chart in 2022 and Netflix as well. Those are some great examples of panic selling when Facebook got to like $88 or whatever. Regret also is part of fear and greed, and it may cause a trader to get into a trade after initially missing out on it because the stock moved too fast, for example. This is a violation of trading discipline and often results in direct losses from a security's price that are falling from peak highs. Yeah. So how do you manage? What are some of the methods that we can suggest to you to manage fear and greed while trading? The first one is to have a definite trading plan. And if you're going to have a trading plan, make sure it's sound and make sure to stick to it. And it's not going to be easy for you to be confident in your trading plan overnight. This is one of those things you're going to have multiple repetitions to see, is my trading strategy working? And that's by following, obviously, your trading plan. My suggestion to you, prove profitability in the sim before you ever use real money. It doesn't get easier, okay? If you can't prove profitability in the sim, what makes you think you can actually make money in real life? Why? It's only going to get harder when there's actual money and the psychology is actually real at that time. That's my suggestion to you. Make of it what you will. So have a definite plan. Having a definite plan while trading in stocks ensures that you stay on track and avoid any emotional impulse that may deviate from the plan. In particular, the right plan can stop you from emotionally induced over-leveraging, doubling down on a losing position, and removing stops removing stops on a losing position. To reiterate what we talked about in the first week about having a trading plan, you have to have an idea of where your entry is going to be. Am I getting a dip trade off a key level, off a key support level? Am I waiting for a breakout trade out of a key resistance level? What kind of a plan is it? Where are your profit takers? Where are your stop losses? Is it one profit taker or two profit takers or more? Is it one stop loss or two where you're taking out 50% and then maybe another 50% at a different level? Are you going to use trailing stops, right? Are you going to move up and follow up the price action? What is your plan? Make sure the plan is well articulated and sound in nature. And the only way to do that is practice, practice, and more practice, okay? Second thing, put aside this get-rich-quick mentality. It's not going to help you any, I promise you that. The most of us are, we're not super gifted. And most of us, if we're lucky, we'll be lucky once, twice, or OB thrice, but we won't be lucky more than that. And then what you'll end up seeing is you're going to give back a lot of those wins. All that money that you accumulated, you start giving back incrementally, and you don't want to do that. So one myth flowing around the stock market for ages now is that you can get rich overnight. However, the fact is that the stock market is a great place to grow your wealth, but in the long run only, not in the short run, unless you're lucky. The market does offer better returns than most other investment options, but that takes time. Again, I kind of analogized it with the real estate market in this country. It's one of those ones where it's a bit of an outlier. Most countries are not like this, where the real estate market can rival the equity market in terms of accretion, but that's neither here nor there. So if you wish to see your money grow multifold, abide by patience and let your investments grow and let your trading knowledge grow. Follow your plan and don't give in to any impulse of fear or greed. A lot easier said than done. All right, a lot easier, quite frankly. But if you don't know that these are the sound rules, how can you start? Last but not least, keep a dang trading journal. Write your thoughts in it, and don't just write the bad things that you did. Write the good things that you did. Reinforce good habits by putting pen to paper or however you want to do it. And most of all, be kind to yourself when you're doing the review, okay? If I was to criticize you to your face, I wouldn't be as aggressive with you as sometimes I'm aggressive with myself. Speak to yourself like you would be to a friend who you're giving constructive criticism to. Be kind to yourself. Don't beat yourself down, okay? So that's what I would say. What are you laughing at, Ram Ram? Ram Ram's all hype off her date today. She's like flying over there. Neymar, what is this Neymar thing from Fabio? All right.
I know of Neymar.
Of course, yeah.
Actually, I'm stunned I know, but...
He's busy nursing a knee injury. He's out for the year. Kaya is. Oh, Ram says she had a date with a banker. She's dating a Bay Street guy, apparently, a Wall Street guy, which is our equivalent of Wall Street. Bay Street's like the equivalent of Wall Street.
The Wolf of Bay Street.
The Wolf of Bay Street.
The Bull of Bay Street. The Bull of Bay Street.
The Bull of Bay Street. That's a great one. All right, Adara.
Anyways, yeah, sorry. So I will stop making questionable puns.
Yeah.
And I will continue with.
Yeah, so anything with respect to what we just talked about there. Lolo says, yes, be nice to yourself. Can't catch every move. There's always another day. Couldn't agree more, Lolo. Sharif, here you go. Yeah, I need coffees, bro. Is my energy getting a little bit low?
I think you seem high energy.
Bit low. Yeah, I gotta tell you, the truth is I'm feeling a little bit low energy at the moment. Man, I had to like barely get through my workout yesterday. I was really wanting to call it quits. I was super tired.
Yeah, no, it's hard. Like I find like that's why I like working out before I go here because I know I get like super, and I know that's not like a thing for everyone. Like I'm not saying like, oh, like, but I'm saying for myself, I know, because I love working out, but I legitimately struggle with like being awake after like 4 or 5 p.m. So I'm like, you know, I kind of like working out a little bit earlier because I know what you mean. It's like hard, especially when you're getting up early, you're getting here early, et cetera, et cetera. But yeah, no, I mean, with regards to fear and greed, I actually was thinking it is interesting the extent to which they go hand in hand, because I was like really listening when you were talking about how one of the aspects of fear is FOMO and then getting in on a move up because you missed out on the earlier move up because you were scared. And then that's when fear becomes greed.
Bang.
Because we're so scared of getting into a movement, then we miss the movement, and then we get greedy. Because, you know, we're like the Ariana Grande song. We really want, you know, we get greedy. We really want to be a part of that that movement to the upside or the downside, what have you. And I think it's really interesting how fear and greed really do kind of fit each other. They actually do come into play. They really intersect. And I think the best kind of case scenario is trying to obliterate both of them when possible, right? Because I mean, it's not, you know, it's not really, you know, a great aspect of trading. And I was also, another thing I was thinking about too, with regards to what you were talking about earlier, with part of greed maybe being not doing, for example, I think one of the examples was like fundamental research on a company and how it's run. Is that still necessarily the case if you're more of like a technical trader?
No.
I just thought that was
you'll
interesting.
see Michael Noss not give you know what.
Yeah, because his thing is charts.
Yeah, he doesn't care.
He'll be like, oh, I was doing like the charts or whatever.
Oh yeah,
He loves the charts.
He doesn't care at all. He's like, okay, there's a catalyst, fantastic. Okay, it's moving. Now let's look at the technicals, right?
Yeah.
Michael Noss doesn't care at all, and Danielle Shea, same thing. I remember when I had an interview with her, I asked her about some fundamental stuff, some macro stuff. She doesn't care.
You're more technical too, right?
Both.
Oh,
I like to do both. Yeah.
That makes sense.
Quick question here. Who's that from? Marshall Abu, thank you for the nice comment. I do appreciate that, my friend. We do our best here for you guys. No question about that. Elon, Adara, Sharif, hi. We should work out like Sharif and dump the obesity drug. Hey man, I'd be all for that. Let me tell you. And we don't know how these drugs are gonna look. I'm not throwing any shade on them because I personally I don't know. But we don't know how these ones affect you in the long run. Like, how long have these drugs been around for? 10 years? Maybe less. I don't know how much they've been studied. So that always concerns me a little bit, to be quite honest with you. Yeah. All right, let's move up. Let's talk about some trading psychology guys.
Yeah, there's a comment in the chat here. Sorry, I'm just going to jump in that I like from Denver Trader. Hope is more relevant than greed. And I mean, I think that's important. Like, I think it's interesting to talk about because I do think it's like kind of good to not, you know, be so worried that we're being greedy that we miss things. But I think hope is like good if you balance it with a solid strategy, right? Like if you're hopeful and you still have proper discipline, you're looking at the chart, you're making trading decisions that make sense. I think that's one thing, right? But I think, you know, hopium is also kind of something to be aware of as well, right? So I appreciate you saying that because, yeah, I think being aware of excessive hope and excessive greed are both really important. I think, you know, hopefully both of those can be kind of eradicated or at least, you know, tamped down a little bit by solid strategy.
All right, average options. Did you guys cover psychological biases yet? Yes, that's what the entire boring lesson yesterday was. If you want to have a go and look at that, yes, we covered biases yesterday. Go and have a listen. Daryl Finch, thank you. No, it wasn't Daryl Finch, sorry. That was average options. And Daryl Finch says, discipline, discipline, discipline. Couldn't agree more. Let's have a look at some charts right now to see what's moving. These are the Mag 7. You can tell Meta looks like by far the weakest on the day. Meta not doing so well, down 1.15% all the while most of these bad boys are in positive territory. Meta struggles to keep its head above water, and it's actually making lower highs at the moment, knocking on the door of that 316. Meta has been very weak lately. Look at this downtrend here on Meta, going several days, several lower highs, several low lowers on META. What was the catalyst on this again? They did something here. There was a reason
Meta's doing
Meta
a lot
was
of
moving
things.
down.
I'm going to find it.
I forget what it was, but yeah, Meta not looking good these past few days.
Sorry, I found it. So there's no more cross-app chats between Instagram and Facebook Messenger.
Oh,
I don't know if that's what it is.
It was something bigger than that. I remember. Yeah, no, it was a little bit bigger than that. I'm forgetting what it was, but it was something more macro related. Anyway, in any event, Meta has been quite weak, and it continues to be weak on the day, down 1.15%. The strongest of the bunch today, I gotta say, to be honest with you, have been Tesla and Apple, both by percentage and by chart pattern wise. Like when you look at Apple right now, look at it hugging VWAP. And the Katina man was bang on this morning. He was trying to tell the Kenobi that, you know, this one was a strong one. It was holding up while, it's all good, you know, while the market was tanking down, Apple was holding that 190 level in the pre, and that's what we're talking about right over here. And then the bell rang, and boom went the dynamite. We knocked on the door of 149.50. In fact, we have a high of 149.40. We do a little bit of a dance here with VWAP where we dip down below, but immediately I've been bought up, and we've been holding VWAP, it looks like here, the majority of the day, holding that 193 level. However, I should mention lower highs have been coming into play here on Apple, where you have, you know, that 194.40 top, and then we crest over here at 193.80, and then a smidge below at that 193 and a third. All the while, though, putting in higher lows. So a bit of a compression pattern forming here on Apple. Adara, compression patterns are what type of pattern?
They are continuation. So if we are, and Apple is up on the day, so it's going to be bullish probably, presumably.
And nothing is 100%.
Nothing is set in stone.
Nothing is 100%.
But, yeah.
But at least if you have a fundamental basis and you have an idea of what you want to do, then, okay, so Adara, now come to the chart, Ram. All right. If you wanted to get in right now on Apple, what would be your approach to getting in on Apple? I'm not saying you have to get in, but what kind of approach would you have?
Okay, well, I would probably want to measure kind of where the breakout might be, right? I know some of the flags is a little bit different.
What do you mean by that? Explain.
Okay, never mind. I think it's...
No, you were onto something.
Well, I was going to say, like, kind of looking at, like, the candles, like, where we first, like, began the kind of compression pattern, right? So I might kind of measure what potential... Yeah, over there. So I might measure, like, potentially what breakout we have. Okay. And then I would probably get in near the low end of the compression. You know what I mean?
Yep.
And then I would probably set my stop loss kind of...
Where?
Probably like around where we have a lower low.
Which is where?
So where I'm like leaning in way too much.
That's fine. Just tell me. Yeah.
Kind of, it's kind of hard to point.
Here or here?
There.
This?
Probably would be where my stop loss is.
That's fantastic.
Yeah.
And why would you do that?
Well, because I would want to make sure, and I get apologies for leaning in too much there. But yeah, I think I would want to make sure we don't have a lower low, because if we have a lower low, then you know, we might actually be moving to the downside, or it might, you know, that because nothing is set in stone, patterns don't always pan out the way you think they're going to.
The lower low. You said you made
so I want to get
point.
So if you get out and unless it makes a lower low, generally it would be seen as more bullish, right? And in terms of profit takers, that's why I would measure kind of how far we broke out to begin with, because then I know how high we might go. I might take a couple beak wetters along the way, and I would definitely measure out. I don't know if I would take Apple just because I'm not, you know, you have to take more time looking at the chart. Put you on the spot, but I appreciate, I really appreciate the opportunity to kind of hopefully flex the chart reading muscles and the hypothetical muscles a little bit there. Baby. Thank you.
Personally, here's what I would do. I'd be trying to get in on the bottom end of the trend line, and I would have my stop set to the low.
Okay.
Right? I would try to have, there's two ways that I personally would get into this. One could be the breakout trade through the upper trend line, or the making of a higher high. You have two crests here with which to work. Or you can get in on the bottom end of the lower trend line, try to get into that lower end of the range. and then set your stop to one of these two troughs, either this one over here or that one over there. That's personally how I bamboozle my way into Apple. It's a great trade, up 2% on the day. Let's see if we can get some continuation on it. Somebody was asking me here about Anoop. Sorry about that. Arup, not Anoop. Arup. Please, Sharif, pick up my question and look into Indian market. Look, my friend.
I love the way you're reading it out, too.
Yeah, because he's very passionate about it. I love that. Look, I think, personally, not financial advice, the Indian market is headed to the high side. Now, there's obviously fundamental reasons for that. You have the decoupling away from China. You want to move your supply chain away and stop relying on China so much. So we call that friendshoring, when you move away from, an adversary like China, typically is, into more of, I don't want to call them, an ally or whatever, but it's less of an adversary, which is India. Obviously, their economy is booming. You have Apple wanting to build there. You have Tesla wanting to build there. The supply chain seems to be moving over there. So I think India is a fantastic market for like the next 10, 15 years. How you want to work your way into that, completely up to you. Sean was letting me know that there's an ETF called the Indy. It's a 50? It's a 50 top stocks? Yeah, the Katina man confirmed it. INDY. It's INDA, excuse me. Let's pull it up over here. Where is that dang chart? Here we go. INDA. There it is. iShares MSCI, which is Morgan Stanley Index India ETF. You can get into that bad boy. Here is the daily look. Obviously, we're not in breakout territory. We're still making lower highs, but if you were to draw a trend channel, we're kind of in a consolidative area. And there's INDY, I'm pretty sure too, Katina, man. I did type it. Yeah, this is it. This is INDA. Oh, this might be the Mexico one. INDA. It's on BATS, right? Yeah, that's the one right there. This is it. Sorry, guys. The other one was on the Mexico exchange for some reason. Yeah, so this one, hey, look. Are we almost at all-time highs over here? Let me see the weekly. Yeah, that all-time highs is 51, and we're 47 and a quarter today is the high. So, yeah, I mean, we're obviously, we peaked. Yeah, this is the COVID low right here. That's a COVID low, yeah. Look, I like the Indian market, no question about that. And you see where the trend is going. You see the Teslas, you see the Apples wanting to focus on India. That's not by accident. That's not a mistake. There's a clear plan here. So however you want to bamboozle your way into that trade, go for it. Yesterday, gapped up quite aggressively over the close on Friday. Have a look at that. We were at 46 and a third. The closing print was, and then we gapped up into 46, almost 47 bucks. So that's been an interesting look. And yeah, that's what I have to really say about that. I don't have much to add to that trade.
There's also a super chat from the Hayes Records, which I'm going to let you read because I think it's very much more your kind of cup of soup. There's some mentions of the Premier League here.
Ooh. Oh, the Hayes Records $4.99 super chat. Thank you very much, my friend, the Hayes. Always an active participant and a very good friend of the shows. I'm treating every 38 trades like a Premier League season. I love this analogy. 3-point W's, 0-point L's. Goal is to consistently average higher season by season to size up. Man, you're making it funny, but what you're saying is actually quite sound. I couldn't agree with you more. Shout out to the Hayes Records. Now you got me into the segue. Now I'm going to go right to my phone, and we're going to talk about the Premier League games that are coming up today, baby. All right. Prem. 2:30 game, bit of a snoozer. Wolverhampton, Burnley. You're not going to catch me watching that. And then the game of the day, baby. Arsenal at Luton Town. In case you guys want a bit of a joke, go and have a look at the Luton Town Stadium. You literally have to walk through people's backyards in a neighborhood. You walk up the stairs to go into the stadium seating, and when you do that, you're looking down into people's backyards. So ensconced is it into the neighborhood, and that's how England is. Typically, these stadiums are like within neighborhoods, but this one, way more so than typically the other was. And it was so funny when they got promoted from the championship to the Prem because everyone started, making fun and throwing shade at their stadium. But it is what it is. In case you don't know what Luton is a city north of London. It's where often you fly in on Ryanair if you're trying to get cheap flights into London and you're trying to go somewhere else. At least that's been my experience. Luton Town has a nice airport there that I flew into several times. 12-1 odds, it looks like today, that Arsenal wins, and I really hope they do because we have to keep our appearances, and we have to do well in our appearances against weaker teams. So Arsenal playing Luton Town today. A couple of good games tomorrow. My favorite is Aston Villa and Man City. City visits Villa. Anybody who's been watching the Prem has seen the outperformance of Unai Emery's team. They've been doing real good. In fact, they're fourth in the table right now with 29 points. They're 1 point behind Manchester City. Can you believe this?
That's crazy.
Yeah, so that's going to be a hell of a game. City, Villa, and then another good game is probably going to be United-Chelsea. United having a lot of trouble right now. Apparently, Eric Ten Hag the report goes that he's lost half the dressing room there. And in case you don't know what that means, it means that his players, have lost confidence in him. Apparently, there's a lot of players speaking to the media off the record, trying to let them know that they're not very pleased with the coach. In response to that, Eric Ten Hag has banned multiple media outlets from attending Manchester United press conferences because they didn't report both sides of the story, not because they wrote bad things about him and the club. Do make of that what you will. So United, lots of issues at United. Not to say that there aren't United issues at Chelsea. There's plenty of issues at Chelsea as they're 10th in the table right now. Pochettino's job may be on the line given how quick to fire Chelsea have been in the past. I know they're under new ownership, but we'll see how that works out. Liverpool plays Sheffield away. That should be an interesting game as well. So the Prem, very interesting as it always is. And we play way more games in the Christmas season in the Prem than we do normally, which is awesome. Yeah, okay. So then you're at home, you're with family, and you get a little drinky, and the TV goes on, the yelling goes on.
I looked at the stadium also, and this is horrifying. The extent
show
of the
everybody.
backyards are part of it.
Yeah, show.
Let's go.
Literally, guys, you're in people's backyards. Yeah, I love it.
This is the funniest thing ever. I had to address that. Also, there's a super chat for Nick W, and I say you have a super chat because it's addressed to you.
Okay.
Thank you very much for the super chat, Nick W. $2 super chat.
Thanks, Nick W.
Sharif Gobriel, can you look? Sorry if I pronounced that wrong.
Oh,
can you look at APPN? Oh, really?
Yeah.
Daily long, they said.
Absolutely. APPN?
APPN, correct.
Absolutely. APPN. Let's look at this bad boy. Appian Corp. Sure. Let's find out what Appian is. It's a $2.79 billion market cap. The company is a software company that provides a process of automation platform. That's as far as we'll go with that. I got to tell you the truth here. The daily chart not looking that good. Looks like those COVID highs took us to $260, and it's been down and to the right since that time. We really haven't made any higher highs. And it looks like we're quite consolidative and have been for some time, going back to essentially middle of 2022. We're locked within a range here of around $60, maybe even less, maybe more like $50 to the north side, and I'd say about $30 to the downside. So about a $20 range of up and down. I don't know if there's a particular catalyst on this, but it's not going to interest me from a technical level until we can decidedly make a new high, rather than consistently making lower highs over here. And I definitely like to see a closing print above that $50 area and a stay above there. Now, remember how we talked about the 3-day rule or the 3% rule? So if you draw a line where you've earmarked a clear level of resistance like I have here around like $50, give or take, right? You're gonna want to see either 3 straight days of price action closing above that level, or for it to get 3% beyond that $50 level, whatever level you've earmarked as a clear level of resistance, sort of as a confirmatory rule, right? It helps with the confirmation process. It's not decisive in and of itself. The only thing that I can really say that's kind of good here at Dara is since January 2023, so essentially this year, we've been making higher lows.
That is very true. That's actually, and they're very prominent as well.
You see what I'm saying?
I mean, like, they're subtle, but when you look at it, like,
they are.
chart it like this, you can really see higher low, higher low.
Exactly.
Higher low.
And we did for a moment make higher highs, but then that was broken by these peaks not building up here.
It's a funky chart.
So quite frankly, you know, maybe this is an interesting dip trade here, but I got to tell you, it wouldn't be a stock that I'd be interested in at all, just based on the technicals. I hope that helps. The Hayes records. As a Man City fan, I'm very fond. He says found of. I'm very fond of Villa's Gambit. I think you mean fond, right?
I would guess fond, but I'm not the Hayes records.
That's all good. James Dell, I think promotion and relegation is going to happen in college football, huh?
I saw that and I was like, that's a solid.
I think it's great, and we've been like they tried to kind of change around college football the way they did the playoffs. They changed it a few years ago, but I think relegation and promotion.
It motivates teams, right? Like my understanding of promotion and relegation is if you're relegated, you really you kind of come together and you want to get promoted, to get back in.
Well,
the Prem.
exactly.
My very limited and mostly limited to Ted Lasso understanding of promotion and relegation.
And it's a meritorious-based system.
Exactly.
Right? So it's merit-based, and if you like the way that works in the Prem, the top 2 teams in the championship, which is technically the second division, despite it being called the championship, which I always found funny.
Which is really funny.
Yeah, it's fine. The top 2 teams automatically move up, and then the 4 teams, so 3, 4, 5, and 6, go into a 4-game playoff, and the winner of that 4-game playoff joins the top 2 and moves up to the Prem, and then the bottom 3 in the Prem, they just get relegated. But what the beautiful thing is about the Prem is that the relegation battle at the bottom becomes sometimes as entertaining as the top.
Yeah.
So trying to hold on, save your life, or trying to hold on for dear life, ends up being as entertaining as winning.
That's literally what Ted Lasso is kind of about.
Oh yeah.
Trying to not get relegated, and then you do
watch
get
the
relegated.
show, man.
It literally is just like that's how I know all the Prem stuff
show.
I know. So yeah, the first season it's really just like them trying to not get relegated.
Really? Okay. That's
Yeah, it's mostly about what you're saying, which is really interesting. I didn't realize that was like a common experience for for Premier League watchers to like kind of make sure that their team like the relegation fight is also interesting.
It is. It is. It's so specific to soccer, European soccer, because we don't have that in even North American soccer. Yeah. We don't, because in the MLS, you're the MLS, and that's it. All right, Walt. Great job, guys. One of my favorite sayings, Warren Buffett once said that it is wise for investors to be fearful when others are greedy and to be greedy only when others are fearful. I couldn't agree more. Shout out to Uncle Warren. Where is he at? Where is he at? Hold on, he's here somewhere. Come on, Warren, show yourself. Show yourself. There it is. Oh, that's Aunt Kathy. Dang it. Ram, do you got it? Nah, she does. She's flying off her date there. She doesn't want to. She told me to shut up. I love it. Ram's getting like lippy over there. I like it. All right, guys. Any other questions? Trading related. Let's bring it back in. Enough Prem talk, I guess. I'll send it to you because I just need to bath.
Yeah, for sure.
Oh, there he is.
Hello.
Hola.
¿Cómo está?
Like and subscribe today.
That was great. But yeah, in terms of trading related, I can talk about my own personal experience with fear and greed with this little baby Tesla trade I just took. When I say baby, I mean because it was short-lived and I took legitimately the smallest amount of shares one could take. So initially I was reacting with fear, but I was also trying to be cautious because, although now we're going down. But I took this short because I was noticing we were really struggling at this 240.50 kind of area, and we had this stutter step to the downside. I was like, this seems like an opportune time. And I decided I want to get out if we break a higher high, which we sort of did, which is why I got out. In retrospect, probably not a significant enough of a higher high to justify me leaving the trade. Now, and then also too, I was thinking, I should plan this trade out better to begin with. I think I was just really excited about the potential of this breaking to the downside. So I did jump in with probably not as, strict as planning as I necessarily should have done. And I was like, I wanted to get out of this 240, but I was like, well, no, Adara, like wait for the your actual profit-taking area to decisively break. That was, we made some inopportune decisions there, and then they kind of basically, resulted in me, if I planned this better, I could have stayed in this trade. I really should have waited to see more decisive higher high. I reacted in fear, and I left the trade. I arguably got into the trade a little bit too earlier in the first place. Thank you guys for fixing my mic there. But yeah, so basically now Tesla, I could have had like $1 in the money had I stayed. And you know, part of it's like, you know, maybe I was protecting my profits leaving where I did. In retrospect, I would argue it's probably fear. This really doesn't look that much of like a higher high to me. But it is what it is. You cannot look back. You can only look forward. I'm going to try to not be too hard on myself. And I would love, you know, for, you know, comments, go ahead. Also, you know, Darren Hilton in the chat, nerves will develop over time. It's never the same in a simulation as it is in real life time. That's a good point. I mean, I am in the simulation right now as well, too, right? And I think my goal here, too, and I've been saying this from the beginning because I recognize that paper trading and real trading are not the same, but I'm trying to, as much as I can, because I recognize, you know, life in a simulator is not ever going to be the same as real life, but I'm trying to make sure that I make, you know, to the best of my abilities, decisions that I would be making should I be trading live, right? So in this scenario, just because it's fake trading, just because I have like, you know, a little teeny tiny baby amount of shares, doesn't mean that I want to overstay my welcome in a trade, right? Or doesn't mean I want to make too hasty decisions. Thank you, Alex Davis in the chat, very much appreciate it. But yeah, so that's my kind of example, my in the wild example of Tesla and how fear and greed were, you know, fighting a battle and I lost. I lost. But there we go. That's what, you know, and I mean, I appreciate everybody sharing their stories in the chat. Sharif sharing his trading journal earlier, because we all deal with it. And it's about how you deal with it. And I probably could have dealt with it a skosh better through better planning on this little Tesla baby trade. There we are.
Yeah, interesting consolidation here below 15.9 on the future. Having a look here, haven't been able really to look too much at the charts during the midday because we've been talking so much about, we've been having to go through the material here for the teaching of the lessons. But look how many times after initially taking 15.9 and then we dipped below it, held up at VWAP initially, tried to make a move back into 15.9. Now all the wicks into that 15.9 area all have been sold off. Every single one of them. And, you know, we've been kind of trying to do a little bit of a dance here with VWAP, breaking it at times and reclaiming it real quick. VWAP is in an area where you don't expect there to be any support. So the fact that we're basing out here really, to me, says that it's VWAP respecting rather than any other level. Like this 15.8 2/3, that means nothing to me. So I want to see how we do in the afternoon with 15.9. Do we continue to reject off 15.9 the way that we're doing right now? And we have been since essentially breaking down here at around 11:15, right at the beginning of the show. Yeah, this is a really interesting look here on the futures. What's the corresponding look on the ES? So that was the NQ. Let's have a look at the ES and see what it's doing. So here's the same look on the ES. Yeah, look at that. We're quite similar in the fact we're not at like that 4,600 level like we are on like 15.9 on the NQ. But this is yesterday's close. So instead of rejecting off 15.9 like we are on the NQ, look at this. This horizontal line, 45.76, is where we closed out yesterday. That's closing print. When we broke that and we retraced above, it started acting immediately as a level of resistance. We've rejected on it. This is the 5-minute chart. 1, 2, 3, 4 times. And then over here, we kind of made an attempt at it about 1 point lower into 45.75, only to reject off it again. So it looks like we're having some bit of issues here trying to reclaim yesterday's closing print. In addition to that, we've been making lower lows along the way on the ES. So you have this trough over here at the breakdown around 11:15, then around 10 to 11 we made a newer low, and then again a newer low at 12:45. So we've been kind of downtrending here a little bit with a very clear flat top. So we'll have to see how we do the rest of the afternoon, but interesting levels here on the future there.
Yeah. Yeah, no, I think, thank you for the little market perspective there. Yeah, it's a really interesting day in terms of what stocks are doing. Like we had that early crazy run up on Tesla, and then Tesla decided it wanted to take a little baby nap. And now it's kind of been napping for I think basically since we've been in the midday. And now it's like, you know, falling deep into RAM and really falling to the downside here. So this is a very messy analogy with regards to Tesla. But yeah, also thank you, shout out and thank you to Darren Hilton in the chat here. I think this is about, like, you know, I mentioned him earlier. I was commenting on Tesla. He said, I left that trade before it flagged. I hit my target. Freedom is giving yourself your own entries and your own exits. No FOMO, you're on your way. Thank you so much for that. And yeah, I think a big thing with this Tesla trade, as much as I'm sad that I left earlier, I am happy I in some way adhered to my point of exit, right? Now, like I said, you could argue whether or not this was a higher high, and I maybe reacted a bit too hastily in that regard. But no, thank you. I really appreciate the perspective, and I appreciate the support here in the chat. But yeah, I think and you're right, it's gonna be personal. It's about your own, what you're comfortable with regards to profit takers. And I think we all know what fear and greed feels like for ourselves, right? Because everyone else is gonna have a different concept of fear and greed, I think.
Yep.
But I think understanding, looking to manage it in whatever way it manifests for you is, I think, legitimately really important. And so I really appreciate your comment and your perspective on that. Thank you very much.
Got a good question here.
Yeah.
From 7 Umi, I don't know what the 7, how to pronounce that. How often do you use intrinsic value to determine whether you want to get in a trade or not, or is it just VWAP, RSI, etc.? To me, to be quite honest with you, first and foremost, it's price action. I like to look right away before I even do anything. I'm charting what I feel to be support and resistance intraday and the daily. So usually I start with the wider time frame, the daily. I look to see if there are any glaring support and resistance levels on the daily, and then once I chart those, or if there is nothing, I go into a narrower time frame, the 15, the 10, the 5, etc. And I want to see, number 1, what the closing print was from yesterday. Number 2, are there any intraday new resistance levels that I need to concern myself with? And then I start looking at the indicators. Where's VWAP at, etc. So I don't use intrinsic value. What I do is I use technicals, and that really influences my decision, especially for intraday trades. Hope that helps. Alex Davis says ARM is at resistance, and Elon was asking about ARM as well. So let's have a look at ARM. I gotta tell you, I like this stock from a fundamental perspective. You hear a lot of companies right now, NVIDIA, AMD included, wanting to use ARM's processor technology as their own. And obviously what they do is they pay ARM a licensing fee for that, or royalty, whatever. So the Katina man says, are they paying an arm and a leg though? Look, from a fundamental perspective, I like the stock, but with respect to technicals, yes, we are at resistance, Alex. Very good observation, and that goes to yesterday and in this morning as well. In the pre, look at this area at $64 where we clearly found resistance yesterday. Sure, we got up into that 64.42 area, but look how quickly we retraced back and broke below 64, coming into that 63 and change area. In fact, that was the day prior, sorry. So that was Friday's level. Yesterday's level, obviously, where... Oh, I thought he was talking to me. Yesterday's level, we closed at 61. So we're definitely at Friday's resistance levels. No question about that. Whether or not we break through that area or not, we're going to have to wait and see. 63.95, obviously the high of day. It's been a great look. I mean, a bit of a U-shaped recovery here.
I have a question too. So if then, because you're always talking about resistance becoming support, if we break above that level, could we then use that as support?
Absolutely.
Okay.
Absolutely.
Cool.
I mean, it's not a hard and fast
It's not
rule.
hard and fast,
You're going to have to watch when it breaks 64, and let's go say it goes to 65. And then you have a day that it retraces down from 65. Does it stop at 64? Is it respecting that level?
Okay.
Or does it mean nothing to it? In the same way that I kept telling you.
Each indicator, yeah.
Well, sure, I've got VWAP on my chart, but does that mean I'm using VWAP every single time? No,
Not every stock
you have to
respects
look
it.
and see, is the particular instrument that you're trading respecting the indicator that you're looking at? In this case, we're talking about VWAP. If it's not, don't use it.
Thank you.
Yeah.
I appreciate that. Thank you.
Absolutely. Comp SRX1. I think he was just saying bye to everybody. I think he was leaving. Any other index questions or stock questions or anything that we had, anything related to some of the subject matter today about fear and greed? We're talking about psychology all week. We've got a bunch of stuff for tomorrow as well. It should be as interesting. Yesterday was more of a technically based lesson when we talked about biases. Today was a lot better, I would say. It was a lot easier for people to kind of
Yeah.
to connect with. I mean, everybody's felt fear and greed. I know that I felt plenty of fear. More fear than greed, to be honest with you, as a trader.
No, and I think like I literally, just kind of, and that's why I'm happy we're able to kind of interact with the market and give these lessons, because I just had my whole example of how my fear got me out of a Tesla short a little early.
Yeah, it happens.
But like I'm not, no regrets. We're here to learn, and I appreciate, people in the chat giving some advice on that as well. Basically saying, maybe I should have looked at wider time frames before I decided that it broke a higher high.
Bang.
I agree. I should have probably looked at the MAs before I got out.
Oh.
I also agree. So I really appreciate everybody giving their food for thought on that. I think, I will fully admit that I think I used the whole idea of, it made a higher high as an excuse to get out of the trade because I was scared. And, there's
I
one.
to mention something here.
Yeah,
Sorry.
sure.
NVIDIA looks real good right now, guys. A bit of an upward channel with higher highs and higher lows on NVDA. We're definitely still within the morning's price action, but looks like we troughed out here at 457.50, a lower trough at 49, and then now we're printing higher highs. We just broke through that latest crest at 461.85. The Katina Man's printed on something there. We'll find out in a second. Long Apple, the Katina Man is. I forgot about that. So the Katina Man printing on AAPL, but NVIDIA looks real good here, guys, with these higher highs and higher lows. And then you obviously have a profit target that you can earmark immediately, which is a day's highs. 465.85 on the door, 466. You can take profits maybe a little bit before that if you're less risk inclined, but NVDA upward channel at the moment.
Yeah, and I mean, I just wanted to address this thing from Fee Rhymes with the AMC in the chat. Sometimes the shame of losing a trade will affect my fear in the next trade. I have that. Like I have had that, especially it's a little bit different too when I'm trading and everybody's seeing the trades too, and sometimes you get like a little embarrassed. You're like, oh, I can't believe I did that. Especially if you kind of, for myself at least, when I say you, I'm talking about my experiences right now, where I've had like a trade that I'm like, maybe I should have waited on the fundamentals. I wasn't patient enough. I got like the technical just wasn't there. But I think, it's important too, if you do see a strong technical setup, and I had this conversation with Neil once too, where he was kind of like, especially because I'm, trading sim, I'm paper trading, it's really just about practice, right? And he was like, sometimes if you see setups, don't be afraid to get in on the setups. And I think honestly, just being confident, especially if there are strong technical reasons for that trade, to get back in a trade, regardless of whether or not you just had a loss, is I think a good reminder. So I very much agree with you, Fee Rhymes with AMC here in the chat. It is really easy to let the shame of a trade get you down, but don't let shame kind of fester into fear, because as we were saying earlier, you don't really gain anything from being excessively hard at yourself, right? No. Like with this Tesla, I can recognize where I went wrong, and I cannot do it next time. Next time I will check higher time frame charts, and we will learn and grow. That's that's the goal here. How to trade. Yeah, thank you. I appreciate that. But yeah, I really appreciated your comment there, and thank you everybody for sharing your experiences with these L's on tradings. Because to quote 21 Savage, taking less L's and making more M's. But we're not going to do that until we learn and until we take the L's.
All right.
I need to stop.
Interesting question here, or from Liam Goldcast. I hope I didn't butcher your name. If I did, I'm sorry. What software is that they're using? We are using something called P-Pro 8, and it is proprietary to Day Trade the World. Day Trade the World is a proprietary trading firm. They are worldwide. We have like several hundred offices. The ones that we're working at here is in Toronto. It is available almost in every country except the United States, sadly, where there are different rules to having traders. You have to be licensed, you have to write an exam and stuff, hence why there is a bit of a barrier to entry there. We're not in that market. But yeah, if you are anywhere outside the United States, Day Trade the World likely probably has an office near you. An easy Google check will answer that question for you. But we are using P-Pro 8. That is the name of the software. Hope that helps. Everywhere except the USA. Yeah, I know. Well, maybe one day, as the Neil likes to say, maybe one day we'll be there. Lolo, if everyone was watching you, you would still make that trade. Is that a good test? Huh? That's a really interesting way to ask that. Yeah, you know what my parents used to say to me when I was young? They're like, you know how to make a decision as to whether what you're doing is right or wrong? Would you be able to do it in front of us? And then like so many things came to mind. I'm not even gonna get into it.
And I think sometimes like when I started, I would actually argue I did the opposite. But when I started, I was trading, you know, like usually from like 11 to 12, and then I get in the midday, like 12:30ish, right? So I had a bit of time where I wasn't trading live.
Yeah.
Or when I say live, I mean like here. For people on YouTube. But I think, honestly, when I first started, I found I was making more questionable trades when I was on the show.
Yeah.
And I think that was because I really felt the pressure to prove I knew what I was doing or something, when it's like, I didn't, I was brand new, right? Like, and I think I really felt kind of pressure to do well, to prove myself in a sense. But now I think, especially now that I'm basically like pretty much just trading on the midday, I think I've let a lot of that go. I've realized, you know, like we're learning how to trade. Like, you know, we're kind of making losses together. And I found like that actually having that technical basis is also, I think, like, you know, learning from you and stuff. I feel like a lot, you know, a lot of input as well, and people in the chat, different experiences. I think all of that has helped me. But yeah, to answer that kind of question, I actually found that initially I traded worse. I think. Do
you expect to trade better as an inexperienced trader than of course you're only going to get better.
Well, that's true too, right? But yeah, no, I think so. Yeah, I don't know if that necessarily correlates then. I think it's a really good point. And you know, that's probably a little bit like hubris or greed as well. I will fully acknowledge that. But yeah, no, I think the more comfortable too I'm getting like trading on YouTube, I think is helping. But also I think I'm getting more comfortable with the idea of losing as well, right? Because you're not going to win every trade. A trade can be well planned. And, you know, the best laid plans of mice and men can go awry. Shout out to mice and men.
I like that.
But yeah, so I think that is a, you know, I appreciate that, the ability to kind of opine on that for a little bit. Because I think, yeah, experience, both in terms of trading in different areas and just trading in general.
API. Very nice comment here. I have a sticker right beside the order box. I like this. That says, "Are you sure?" And it gives me a second of reflection, and it works for me. Whatever works for you. I don't want you to doubt yourself, because I think the more reps you get, the more you're going to be confident in your setups. And again, if you have a trading plan, allow it to develop. Now, I think what you're saying is maybe you're trying to prevent yourself from getting into some bad trades. And I think what really helps with that is practice, right?
Yeah.
You're going to be able to notice the good ones from the bad ones. Practice, and more practice. We're talking about practice. We're talking about practice.
I can't believe I know this reference, but I do.
Yeah, of course. He's an OG, man. You think he doesn't? Yeah. We're gonna put Obi on the spot. He's not here at the moment. When he comes back, the Katina man is gonna ask him about. I don't want him to hear me, Ram. We're gonna ask Obi if he knows about that, and Katina man believes that he doesn't know, so we're gonna find out.
Also, Darren Hilton in the chat kind of saying something that you were kind of touching on here as well. The more trades you take, the more desensitized you'll become to the highs and lows.
Yeah.
And I think also that might help with fear and greed as well, right? Because you recognize that winning doesn't come from luck; it just comes from a well-planned trade sometimes, right? And sometimes when it doesn't feel good when you win because you broke your trading rules either. Mm-hmm. You know what I mean? Then you kind of feel like you got away with something, which can lead to a little sketchy habits there. But yeah, so I think I really appreciate everybody's insight in the chat, and especially with something that is kind of as subjective or subjective as fear and greed. Subjective, thank you. Because fear and greed, there's no like rule. Do you know what I mean? It's just, it's how it feels to you, and it's like you have to answer to yourself, like we were saying. You have to be accountable to yourself and your trade rules. All
right, a good stock that's been running today in small cap gapper world has been ANY. The name of the company is Sphere 3D. It's got a $22 million market cap. Here's a chart for it. And it has a 13.8 million share float. It's been very steady in its ascent up. From 930 onward, it's been making higher highs and higher lows. VWAP has been a very good dip buy off for this particular stock. You had a couple opportunities to get it at VWAP, I would say most namely, 11:20 a.m. it got a VWAP touch there, and then again at 12:10, so about separated an hour apart almost. But it's been holding VWAP quite well, and it's been trending up with the higher highs and higher lows. Nothing really to say about this. Less bamboozling, especially for a dollar name, than I would have anticipated, especially given the float of 13.8 million shares. I thought it would definitely be a bit more volatile. It's been running up for several days now. On Friday, It had a low of about 57 pennies. Now we're talking about a $1.69 high. So a good look here on ANY. You might want to keep this on your watch list for tomorrow, as it could continue to run. Yeah,
it could happen anytime.
ARM just broke day's highs. ARM is running, guys. I see people talking about it in the chat. 64.25, 23, is the high of day on ARM. We are still within kind of that resistance level. It's not a resistance price, it's a resistance level that takes us back to Friday's high. We kind of got into that 64.45. We're there again, but we broke through today's high, so it's a good look for ARM. That bull flag continuation. Do you see that?
Oh yeah.
With a
and then we flew.
There you go. So you end
ARM
up.
loves bull flags.
What?
Does it?
Yeah, you're right.
This was the example we used bull flag.
You're right. Yes.
ARM and bull flags.
Yes, you're right. So nice bull flag continuation here on ARM. You had to pack your patience on this one because we honestly made the high of day at around 11:15, right when we started the show, and it just broke out through the upper trend line. So broke through that lower high pattern here at 125. So it took a little bit of time for that one to manifest, but ARM continuing its ascent up 64.30. Just to remind you guys, about a 64.45-ish area is the high from Friday on ARM. Good look there. I don't particularly see a catalyst for this name on the day. I don't see anything here from today. Is there anything from yesterday? I'm just looking. Jefferies raised the price target on ARM yesterday from 64 to 76 on Jefferies. Jefferies Financial raising that price target. So yeah, there was something yesterday for ARM, but nothing today. Anyway, it continues to run up while the market is moving sideways. By the way, somebody wrote in the chat, I was asking earlier what the negative catalyst on Meta was, and it was the child thing. Remember they were making money off the, what's it called, when children message each other? They were making money off that somehow on Messenger. So
that's messed up.
Yeah. So they're being sued there. They want to claw back some of those profits. Also, they're using like facial recognition stuff, I think.
Yeah, I heard about that.
Yeah, something there. 5 minutes left on the show, Adara. Been a good day talking about fear and greed. We're talking about psychology all week. Yesterday, we were talking about biases. Today, we're talking about fear and greed. More in the hopper, or is it in the hopper? Yeah, in the hopper. Or tomorrow.
Yes, lots in the works. Hopefully people are, getting something out of this. I feel like even just kind of being able to talk about the market with everybody and with Sharif and in front of everybody has been very helpful to me. We can't always be the bulls of Bay Street. We can't always be the wolves of Wall Street. We can't be overrun by greed, but we also cannot be overrun by fear. Cough, cough, that Tesla trade. So it's really just about really sticking. And as you were mentioning, just now packing patience. I think that is like something I really appreciate you saying, because I think that's a big part of overcoming trading psychology issues. Being patient as long as the plan is still intact. You know what I mean? Like as long as we have not broken your stop loss, as long as the chart is doing what you had planned for it to do, then I think, I think it's a solid thing to keep in mind, especially with Trading Psychology Week, and hopefully we can all learn a little something as the week unfolds.
Yeah, absolutely. Obi's back.
Oh.
Obi's back. You don't want to ask him anything? Oh.
Yeah.
Stay tuned, baby. Stay tuned. We're going to ask Obi in about 3 minutes. Well, he is not mic'd up. Are you? Oh, he is. Okay, bring in the Kenobi.
I'm excited.
No. Oh, there he is.
All right, what's up?
Hi, Obi.
Obi.
What's going on?
You know that saying, practice? We're talking about practice?
He does not know.
As we
Practice, I don't know. I've heard people say practice makes perfect. I don't know about that.
That's not a bad one. But do you know that like little incident with a sports player that kept saying practice? We're talking about practice. Yeah, that's all good.
I don't think so. That was the question?
Asked and answered.
Oh, okay.
Asked and answered.
What?
All right. Thank you.
Thank you.
I enjoyed that. That was very nice. Like that he just like appeared on the screen.
Oh, the Ram doesn't know it either. That I can understand.
Also, there's Kevy in the chat asking, no Eli Lilly trades today for me. Yeah, I mean, the volume was below 1 mil, so I said no to Eli Lil. And that
Oh,
and I
wow.
So sad I said that.
Wow.
I regret that immediately.
Ram Ram's giving you a round of applause back there, too, by the way.
Thank you, but
yeah.
do I deserve it?
That's hilarious.
But yeah, there we go, yeah.
All right, guys, very consolidative for the majority of the afternoon on the futures here. Let's take a look at the NQ as we wrap up here and the big kahunas get ready. Make sure to join Obi and Sean on the closing show. They'll be doing a lot more trading than we've been doing on this show, I'll tell you that. We've been below 59 the majority of the morning ever since breaking it here at around 11 o'clock. We tried to hold VWAP a couple of times, and we have been. VWAP's been holding from the south side, but from the north side, we've been rejecting off 59. I'm going to be keeping my eye on this level in the afternoon to see if we can retake it in the same way that we've been below 59 on the NQ. We've been below yesterday's close on the ES. That's that 45.76 area. Multiple rejections off that 45.76, 45.75 on the ES. We'll see what we get in the later parts of the afternoon. Check out Power Hour with Obi and Sean on the closing show. I'm sure they'll have many more trades. Sean has been involved in Apple long. He was holding a firm short the entire morning. I'm sure he'll have more to say. And Roblox, by the way, for those wondering, he'll have much more to say about that when we send it off to him. About 30 seconds, I'll give it to you.
Yeah, no, I mean, yeah, thank you for Bears versus Bulls in the chat. The midday edutainment, which I think is a good way, education, entertainment, hopefully we're providing. Yeah, thank you for that. Thank you, everybody, for the support. Hopefully we learned about fear and greed. But for now, we will just have to wait and see you tomorrow for more trading psychology. Same bad time, same bad channel. Brendan is at the big desk.
Whoa, new one.
I don't know what that was, but here I am. Yeah, 2 o'clock on a busy Tuesday afternoon here, guys. Let's get right into a few things we need to know. I was just having a look